adding tags and everything else. Go down here, copy the tags, add them to latest video. Just setting up at the minute. Okay, so my restream. Okay, I think I'm online everywhere. Just have a quick look at where I am. Am I online on Twitter now? Yeah. Online on YouTube, and am I live on Twitch? I'm live. Yes, so I'm live everywhere. Go live here. Okay. There you go. Becky. Okay, so let's have a quick look. Where else are we? Just doing the watch list. So far I've got Becky, which I've already traded this morning. We're already $1,400 up this morning, which is, as far as I'm concerned, a good start. Okay. Hey guys, just welcome to the chat. I will flip this so that you're actually seeing it the way you should do. That's better. Put the light on. Now I can be seen. So much to choose from today. So much to choose from. Okay, KC. Just looking at Becky. BDD, yeah. Yen. Yeah, okay. Stock selection is going to be key today. So, going to be very ruthless in terms of anything under $4. No. BDDL, no. No. Billy. Let's have a look at Billy. Yeah, okay. Got a huge watch list here today. There's a lot of movement. So, future. Low on volume. Just Tencent is low on volume, relatively speaking. And JD, let's have a look at JD. Let's have a look at the chart. Okay. It's a bit more expensive, but I will get rid of that one. Alibaba is up 20%. Alibaba, wow, big stock as well. So for that to move 20%, there's a lot of people trading that. I'm just looking at the relative volume. I'm being selective on the relative volume. was where are the trades taking place? That's the question. Okay, that's fine. Okay. So guys, who am I investing in today? That's a good question, because we've got a whole bunch of gappers. We've probably got, you know, two dozen gappers this morning to choose from. There's a lot gapping up. I took a trade about 10 minutes ago, no, about 20 minutes ago, with Beke, which is KE Holdings. That was on good volume as well. So I'll just we managed to get green already on that. I'll talk you through that that trade shortly. So I got in for the break of highs, and it just carried on moving up. So I waited for a quick pullback, and then when we got the pullback, I jumped in and rode it up from, what was my entry point, was 1323. I got in for the break of 1320s, got filled at 1323, and my top point of leaving was 1355, 1356. So we got a 25, 30 cent move, which was you know, a good start to the day. So you're fine. You're fine. You can get bored by this live. I just need to jump in with on the TikTok. So I need to move the chat from here to the same place where all the rest of the chats are. So just bear with me one moment. I'm a little bit late setting up, simply because I took a trade. I came in and sat down and started looking at the gappers. There was loads of gappers, and then I took a trade. So instead of actually setting up effectively the first stock on the list, I saw it moving up, so I jumped in on the first pullback I saw and rode it up, and it's, to be fair, it's sold off since. So I'm glad I did that, and you know, we've been able to trade for the last hour or so, but that's good. Just want to. Okay, I'll move this across so I can see the chat in TikTok. There we go. Right. Analysis on plug power long term. Plug power's got the whole EV space is something that interests me. I'm bullish on all of that, but I'll go into that a little bit later. Which exchange you use for US stocks? Which exchanges? So primarily I use the NYSE and Nasdaq. So that includes the Dow, that includes the S&P 5. All of those are included in that. So New York Stock Exchange and the Nasdaq. See, but when did you buy your 800 shares in Plug? Do I spend any of the money I make? Of course I spend the money I make. I mean, what's the point of having money if you're not going to use it? I don't spend it all. Of course, I move it from one investment to another. So I move it from my from this account into other accounts where I might be taking long positions and holding long term. I don't trade on margin when I've got an account. I've got a cash account with capital markets. I've got a cash account and my retirement account with Interactive Brokers as well. I've got a margin account there as well. And I take my long-term investments are done on my cash account, as opposed to my day trades, which are done on margin and using on leverage. So it's different. It's different. James Aviation. Okay, guys. So we've got. I'll just. Okay, so we're just. I'm just watching. I mean, we're kind of spoiled for choice in terms of gappers, but in terms of the volume where it actually is, most of these gapped up early. I managed to get in on the KE Holdings move. That was about 15-20 minutes ago. So we managed to make $1,400. So we're in the green today so far. I've got a cushion to start off with, so I can now relax. What I didn't want was effectively three. I prefer capital markets, if I'm being completely honest. It's a good question. Which Harvey asks, Harvey Interiors asks, do I prefer capital or IBKR? I personally prefer capital markets. However, I've got nothing bad to say about IBKR. If I'm trading options, I'll trade in IBKR. If I'm trading in my retirement account, I'll trade with IBKR. So I like the options chain with IBKR. I've never traded options with capital markets. I just haven't. Yeah, absolutely. So it doesn't matter who your broker is. The strategies that I use are broker agnostic, the platform agnostic. It helps if you've got a platform that gives you direct market access just in terms of speed of transaction. You need to be able to be setting limit orders for your risk versus market orders, because you get more slippage on a market order on a stock that's moving quicker than you would on a limit order. So those are two things that I would mention. But you can trade on any platform that gives you access to the markets and access to the instruments that we're trading. You can trade with any broker that gives you that. So if you look at Sterling Trader, DAS Trader, which is what I use, T9000 or Lightspeed, these are direct access softwares for trading, but they all partner with multiple different brokers. So whoever your broker is, do a bit of a Google and find out, do you have to trade with the proprietary platform? If you're happy with the proprietary platform, great. If you've learned with the proprietary platform, and it's because I've not used every broker, I've not used every platform, so I can't say which way one will go and which one which is best and which isn't best. All I can give you is my opinion on the ones that I've used. Okay, now I've used MetaTrader. That tends to be the most popular in the industry because it's popular with the foreign exchange crowd, the FX crowd, and it's really built. MetaTrader 4 is built for forex, whereas they've improved the MetaTrader 5. They've tried to add the likes of options functionalities and equity functionality to it, but it depends who your broker is. If they're typically forex biased broker, they might only carry a subset of instruments on the stock exchange. They might not carry everything that you need. So just be wary of that. Whoever your broker is, have a word with them and say, do they recommend a particular direct market access platform? Is there a particular direct market access platform that they are that they work with, or that they would recommend to their people? And 212 will be no different. So they'll have their own platform, but they will let you know which other platforms that they will have APIs for, or they will work with directly. So yeah, so you can be successful with 212. I've never used them myself. When I was getting involved, there was a massive waiting list. I think it was at least 6 months waiting list with 212, and I never even got a response back from them to say that the waiting list is open. So I don't know if you're using 212. Good luck to them. Good luck to them. Okay, Neo. I'm bullish on Neo. It's having a good day today. I'm not likely to be trading it because it's a huge float. Right, where are we down here? Neo. Just pull it up here. So Neo is currently 19% up on the day. Q4 earnings. So shares of some of Chinese companies are trading higher following a Chinese state media report indicating China's Financial Stability and Development Committee urged market stability measures and mentioned cooperating with US regulators. So that's why we're getting a lot of Chinese stocks that are up, including Alibaba, including Dada Nexus, including Li Auto, which are all Dada Nexus, Li Auto, NIO, Xpeng. All of these are the Chinese EV manufacturers. Are all up today. They're all gapping up today. So there's a positive outlook on the Chinese stock exchange and Chinese equities that are trading on the US exchange as well. So we've got a lot of options in terms of what we can trade today. So I'm being very picky. Stock selection today is going to be key. I'm already in the green on the day, which is good. So we've still got a little way to go to get to get the drawdown back on the week, to get a green week. But we're green on the month and we're green on the day. So as far as I'm concerned, that's a win. And we can forget about the poor start to the week. We just continue to add to the month. And that's the way I'm going to look at it. That's the way I'm going to view it. So I've got so much moving at the moment. So Becky was the top one. I'm spoiled for choice. I really am. So I don't want to. I've got to be careful with regards to any kind of derivatives. Like Direction Daily is a FTSE derivative. So I'm not going to be doing that. So Kingsoft, KC. I'm going to put that on the list because that moved yesterday. It's not great relative volume, but ding dong. So I'll just have to look at the relative volume again here. BDL, ding dong. So BDL is good relative volume actually. What kind of size float is it? That's PDD, not BDL. So I want to see what size float it is. 200 million float. Ideally, I want a float share size or float size that's less than 100 million. So to help us with the filters, I might actually take a look, see if I can do that. Okay, no, that doesn't have that in this particular one. I'll just go off relative volume. EDD is a third of its current average. It's moving up slowly. Okay, I've got Billy on there. Okay, so I'll just thoughts on Neo. As I say, I'm bullish on the whole EV sector. I'm just right now. I've got so many to choose from, so I'm just trying to pick out the ones that I think have the potential to make a move based on relative volume at the moment. So future. I've got that twice, so I can delete one of those. Tiger. Let's have a look at Tiger. No. Don't like the blanks there. Might change after the bell, but I don't like the blanks there. So we've got 45 minutes to the bell, and I've still not finished my my watch list. Tencent. TME. Traded this one before, I'm pretty sure I have. This is all these Chinese stocks are moving up today, so just be careful. It's a 1.6 billion shares, so I'm not going to be trading that. Tencent. And I want shares that we can actually make an impact with. Let's have a look at JD. Well, that's looking decent. 5 minutes, not 15. Zoom out slightly. So JD could be another Chinese stock. So it looks like it was been the energy sector for the last while. It's going to be the Chinese stocks today by the looks of it. I'm going to put JD here. No. Alibaba. Now it's a bit. Let's have a look at Alibaba. It's 20% up on the day. It's been selling off for a while. It's decent volume as well. So it's already 20% of its daily volume with pre-market. So, but it's a bit more expensive than I normally would like to go for. So I'm going to leave that off. We're not spoiled that I have to be desperate here today. 1.52. Right. So NEO is a 60 million share average. It's way below its average daily volume. So relative volume, it's low at the moment. Still good volume. 7.3 million shares pre-market. Still good volume, but we're looking for high relative volume, not just high volume. Okay, so I'll leave it at that for now, and I'll populate my little chart over here. So I'll just add. I've got BK, KC, Yin. Someone asked me about IXHL. It was low volume yesterday, but it was making silly moves. Now today, it's not actually doing much at all. So it had a bit of a sell-off after hours last night, and it's trading at 17 bucks today. So it's been trading sideways since it sold off last night. So that's not one that I'm interested in. And what else have I got here? So Yen PDD. PDD. Oh. Delete. Q2. And go for JD. Okay. Get rid of that one. It's not a good chart, intraday wise, on the 1 minute. Okay, so we've got a watch list, and I will address the chat now. So who do we have in the chat? Okay, so some stocks aren't available on 212. Yeah, so if you're with a platform, and this is why I like the direct access software, because they'll give you direct access to the full market, and you can trade the full market, and that's what you get. So you get in the software, and your broker is facilitating you trade to the full market. So you get DAS, you get the data from DAS, which is coming directly from the market makers, from the Nasdaq, from the NYSE, from the exchanges. So that's why another reason why I say, look for a broker that works with one of these direct access software or provides a direct access software platform. So yeah, I mean that's a problem. So someone I was having a conversation offline with somebody on TikTok, and they were talking about crypto versus stocks for day traders. and cited eToro and some other, you know, platform as a day trading platform, and neither of them are, because a lot of what eToro does, for example, is CFDs. You're not actually buying the underlying stock. They only have a very small subset of the underlying instruments to actually acquire. Otherwise, you're just buying a CFD, which is a contract for the difference. So if the stock moves up, you can profit from the difference in the price. If it moves down, you lose that from your equity. Unless you're shorting it, you can short it. Of course, you can short it. But then again, with eToro, there are certainly only some stocks that they will allow you to short as well. So that they limit what you can and can't short. So eToro is not great for day trading. It's not great for the day trader. You can't set it's market orders or nothing. So you can't set limit orders. So it's market orders or nothing, and they don't carry all the instruments. So something like eToro, it's and they don't carry all the technical indicators either for the technical analysis and the charting, etc. So there's a number of reasons why I don't like trading with eToro, other than just the fact that I lost money with them in the first instance. Although that is a big one for me. I'll talk you through the first trade of the day. I wasn't on stream. I did it before we got on the stream. It was KEO Holdings, which is the top gapper at the moment, trading at 1332. It's or 1320s. We got in for the break of 1320. I will show you here where we are with this one. Just flip the camera. I'll zoom in so you can actually see it. So, and then I'll walk you through the actual trade itself. Okay, we got in here for the break of 1320, which was the high of this body here. We'd seen some previous resistance here. So we got in for the break of 1320. We got filled at 1323, I think it was. And then we rode that up. So pre-market, I was going to be very tight on the risk. I was like, okay, it's 1320. I'll give it till 1310s. I'll give it 10 cents because I know based on if you even look at the 5-minute chart, based on that, we can assume that it's going to go up to at least 1350. So I was 1320 for a move up to 1340. So I was risking 10 cents on this to gain 20. So I jumped in there at 1320, rode it all the way up, and we took our first bit of profit. We took half the position off at exactly 1340. So that's where we were. Then we went up and we took another bit off at 1347. It was actually, we wanted to get out at about 1349 for some potential resistance at the $half level, 1350. It touched 1350 and pulled back. So we were right to actually limit our exposure. Then it moved up again, okay? So it went up to 1355. So as it broke 1350, I jumped back in, added to my position, and it went all the way up to 1368. Then it started to pull back, and it pulled back fairly quickly. So I quickly took off half of my position at that stage. So basically taking profits again. And my new stop was down at here. So this is break even on what was remaining of what we had in the position. My new stop was 1344. So it came down and we got stopped out. So that was the trade. So if I look at the profit and loss, we made just over $1,500 on the actual profit and loss in terms of the trade profit and loss. So we're about 1,400 in the green after commissions and charges. So that's a good start on the day, and it's those kind of wins to start off that give you a bit of confidence after 2 red days. So I like to kind of put on this bravado that I know what I'm doing and that it doesn't affect me emotionally, and I kind of disassociate myself from the losers and just concentrate on the winners. And, you know, to a degree, that is the case. But you know, I'm only human. So 2 red days in a row, and yesterday in particular. So Monday in particular, it was every trade I took went against me, and we dug a bit of a hole on Monday. So that was a bit of a. It does give you confidence, a bit of a knock. That's human nature. That's what happens. And yesterday to come in and it's like, okay, try and put that behind you, and then you get 50% accuracy. You've got a winner and a loser, but unfortunately your loser is bigger than your winner, so you finish the day red. So 2 red days in a row. The last time I had 3 red days in a row was last December, the beginning of December, and I actually took 2 weeks off after that, funnily enough. So I took 2 weeks off after the first 3 days in December, and came back and ended up finishing December in the green. So it is about a lot of it is psychological when you're trading. So if you get to a point where, hang on a minute, my confidence is low, I'm not feeling it, don't go back into the markets. If you really are feeling up against it, don't go into the markets. If you're hungover, and this is what was wrong with me on the 28th of February, I was hungover. I watched the League Cup final. My team Liverpool won the cup final, and what was started off as an afternoon's drinking turned into an evening's drinking, turned into an early morning's drinking, and I was hungover, so I shouldn't really have been trading on the 28th, but I did anyway, and I lost a lot of money on the 28th of February. So I wasn't in the right mindset to be trading that day, and I should have recognized that. And this level of self-awareness is important. If you're going to be a profitable trader, you don't have to be 100% self-aware in terms of what you're trading and how you're trading on a particular day. But it helps. Okay, so I am a profitable trader. The stats and the numbers back that up. However, that being said, I'm still human. So I sometimes let things get the better of me, and this week, coming in today, I had to take a moment off and just kind of recompose. So when I saw that moving up, and I looked at the time, and I was thinking, okay, well, I can trade. There's an entry point coming up. I'm going to jump in right. So I stopped scanning for. That was the first thing I looked for. Was I was starting to open the scanners, and I haven't even opened most of my scanners. It was just the first one, the gap scanner. And the first one on the list was Becker. So I looked at it. I looked at the movement. I looked at the relative volume. I looked at the chart, and the chart was setting up nicely. So I thought, okay, I'm going to jump in here, and I'll see if we can get a cushion for the start of the day. And that's exactly what it does. And what that does, it just takes the pressure off a little bit. It doesn't have to be a big win to start off with. Just get green on the day, and it takes the pressure off. You can actually relax a little bit. You've got, even if your next trade's a red trade, you know, you can still finish the day green. And that's the thing. It's the psychological part of trading is probably the biggest thing that you're going to have to learn, and I can give you a lot of tips, I can give you a lot of guidance along that way, but that's something that you have to learn yourself, is the psychological element part of trading. It is the most difficult lesson to learn, and one of the reasons it's the most difficult lessons to learn is nobody can actually teach it. It's something that you have to learn for yourself. So when you're trading in a simulator, you'll get an element of that, but it's magnified 10, 15 times when you get into when there's real money on the line. The emotions really are extenuated when it's in a live account over a paper account or a simulator. Just bear that in mind. Just bear that in mind. Is that the emotional element is a huge piece. Okay. That's something that will only come. It's like keeping control of your emotions. It's a bit like yoga. In fact, quite a lot of people that do trading like to practice yoga. I'm not a yoga person myself, but a lot of them like to practice yoga because it allows them to center themselves. And to keep going to the gym, for example, requires a certain level of discipline. So, you know, it's I wouldn't dismiss yoga as something that can help with trading. If it helps you to whichever, you know. Rex Carlos is correcting my grammar, but whichever you want, whichever one makes more sense to you. But whatever helps you center yourself, whatever helps you calm yourself, whether it's going to the gym, walking the dog is a big thing for me. Yoga, lifting weights, going for a jog, whatever it is that helps you kind of center yourself and relax and take your mind off this stressful element. Okay, so I'm going to go back to where we are right now. So I've got the high of day mapped out. The high of day on Becky is 68, I think it is. 68, 1368. So that's not setting up. KC is now setting up for a potential trade. The high of day on KC is 69. So I'm just going to put a little line there. The low of this last 5 minute range is 55. So don't really want to see it going below 55. But we've got a top to watch. And let's have a look at some others. So there's so much to choose from today. It really is. There's a hell of a lot of stocks gapping up. If you are trading today, stock selection is going to be key because there's so much movement, there's so much volatility in the market today. There's a lot of volume in the market today as well. So stock selection is going to be key. Look for the relative volume. Don't just get dragged in because it's trading. If I look at on the daily, NEO, for example, is the top volume stock. Pure volume is nearly 8 million shares traded, all right, and it's gapping up. So it's 19% up on the day. It's currently trading at 17.8. So by all intents and purposes, I could look at that and say, well, NEO is there's more people trading NEO than any other stock by the tune of about 20%. It's gapping up at least, so it meets that criteria from a gapping up point of view. It's currently 90% up as well. Price-wise, it's in a nice sweet spot. It's in the upper teens. It's 1780s at the moment. But then if I look at NEO, from an intraday perspective, from a swing trade perspective, I think it could be a good option. It's not a stock pick, not financial advice. I'm not a financial advisor. Don't sue me if you do lose money on NEO. Now, I like NEO as a company. I think they're a good that whole sector, the EV sector. I keep saying it's one for the future. So long term, I think there's good things with NEO and a lot of the other EV manufacturers. But if you look at NEO, it's gapping up in line with the whole Chinese stock sector. So Chinese stocks are very buoyant. But if I look at the key data here, we've got 1.6 billion, nearly 1.7 billion shares outstanding of NEO. So if I take 10,000 shares of NEO, it's not going to move the needle at all, not one little bit. If there's 10 of us, 20 of us, 100 of us, and we all take 10,000 shares each, it's still not going to move the needle very much. You know, 1.6 billion shares, it's a huge float, huge, you know, it's absolutely enormous. So that then when we look at that, we're not going to make a huge impression. So when we actually look at the average turnover, the average volume that you're looking at in NEO, it does, any given day, it'll trade 61 million shares. And it's currently trading 8 million shares. So today is actually, it's no better than any other day. In fact, it's actually slightly less shares traded today than it normally does. Pre-market, granted, we're 10% of the normal average. What we want to be looking for pre-market is that it wants to be half of what it normally trades on a given day, the same as what it is, or 2 times or more, ideally. So if we look at the next one down, which is Alibaba, on the other hand, which is 91, priced at 91, so it's a little bit expensive. But we look at the relative volume, it would normally 25 million shares traded on an average day for Alibaba. It's currently 5.8, so it's only 25% of the daily average. So again, it's higher volume than it would normally trade pre-market, but it's still not relatively high volume if you look at it. Let's get one here that if we look at, for example, Future Holdings, 5.7 million shares normally on the average day. It's already done half of that today, pre-market. So that's one that's on the watch list. It's $34. It's 29% up, 29.5% up. If I look at the float, so that the actual float of this, which is the number of shares, were 146 million as opposed to 1.6 billion. So it's a much smaller float size. So that's what we want to look for. We get the volatility, so the relative volume in line with the float size is a big thing. So if we're getting more shares traded of that particular stock than we normally do, that tells you that there's a lot more people interested in that stock today. But we want the volatility, not just the volume. We're looking for the two V's, volatility and volume. To get the volatility, we need a relatively high volume day, but in relation to the float size, we need to be able to make an impact with that relative high volume. So if we're going to trade 5 million shares, that needs to be relative to the actual float size. If it's the Bank of America, 5 million shares is a drop in the ocean. Okay. So Louis, I didn't have a green day yesterday. We had my second red day in a row yesterday. So unfortunately, we're green on the day so far. We've got $1,400 in the bank already on today. So we're just waiting for a couple of setups to come to us now. I don't think we're going to be lacking in opportunities today. So I just saw GDS, which is GDS Holdings, just popped up 33%, gapped up in the last 5 minutes, and I've just opened the chart, and that's why. So I think it's probably some kind of share split or stock split. That's usually what kind of pattern that does. So. Okay. Shares of technology companies are trading higher as stocks rebound following Monday weakness after softer than expected US inflation data. The drop in yields has also helped lift the sector, though investors will await Wednesday's Fed decision. Yeah, I think the Fed decision today could it could impact the markets in a big way as well. So, I mean, if I look at the Nasdaq's 1.3% up, the SPY is 0.8% up on the day. So, and they finished well yesterday. Did the markets? So, GDS Holdings pre-market trade up 26% pre-market trading. GDS has an overall score of 31. Find what this means. So yeah, there's no real news catalyst for that one, so I'll be wary of that one. GDS, it's gapping up pre-market, but then we've got a lot gapping up pre-market. It's 29% up on the market at the moment. But we've got a lot of gappers today, so we're not spoiled. We are spoiled for choice. We're not going to be short of options for trading today. So, I'm hoping. I'm hoping I see a nice little green streak. So rock hard, yeah, green. So we're back in the green today. So sometimes that happens. So this is what I keep saying about the psychological aspect of trading, is that you've got to accept the fact that you're going to have red days. You've got to accept the fact that you're going to make trades that go against you, or you're going to make bad decisions on a trade. Ideally, you want to be able to justify your entry to a trade, and that way it's not a bad decision, even if it goes against you. If the setup is right and you enter and it just fakes you out, that's not your fault. If you entered with the right intent and the right setup, and it does go against you, and invariably that will happen, you just get out first and limit your losses, and that's the big thing. It's just it's okay to have 7 red trades in a row, 7 losses in a row, if you're cutting your losses quick. then you hold on to that one big green trade that more than covers those losses and gets you into profit. So that's the thing. Risk management is the biggest single fundamental issue when it comes to being profitable. It's risk management. You have a good risk management strategy, you will be profitable. And it's probably one of the biggest concepts, one of the most difficult concepts for us as people, as humans, because it goes against normal human nature. You kind of want to balance your risk versus reward, and you don't. Human nature says, okay, well, I'm going to take my profit at 10 cents. I'm 10 cents up. I'm going to take my profit. And then when it drops below, you're like, oh, I'm going to wait till I'm 10 cents down. It's like, well, you've got a 1-to-1 ratio there. That's not right. As opposed to, it's stalling at 10 cents, but you were ready for it to move up to 20. If you've got that range within the stock, if you see that there's a window of opportunity there, then why don't you wait for it and give it the opportunity to move to 20, or just take a little bit off your position, scale out. There's nothing wrong with scaling out and scaling in. I'm based in Ireland, so I don't have the PDT rule. I'm also trading with an offshore broker, so they don't enforce the PDT rule. So this Sid Owen here says that, or Saeed Owen wants to know what platform I'm using and does it have the PDT rule. So those that are not based in North America or in the US, the PDT rule is the patent day trading rule, and the government in America have enforced this rule that if you're trading on a margin account, if you're trading on leverage, that you have to have a minimum of $25,000 equity at the start of the day. Otherwise, you will be limited to a maximum of 4 intraday trades per week, which is kind of BS. But I understand where they're coming from. They're trying to babysit the retail traders, the retail community. The way around that is there's two main ways around that is if you've got less than $25,000 and if you're in the US and you've got less than $25,000, you can split your equity into 2 and trade in a cash account. Rather than using a margin account, there's no limit to the number of trades you can take in a cash account. But you will be subject to settlement rules. So settlement is usually trade plus 2. So you trade today, those trades settle the day after tomorrow. So if you split it into 2, you trade 50% of your equity today as many times as you want, and then you trade 50% of your equity tomorrow as many times as you want. And then the next day, you're trading the same equity you was trading today, and on you go until you've got over 25,000, and then you can move to a margin account and trade until your heart's content. The problem with that is if you're trading with a $5,000 account, a small account, is that you're only going to get $5,000 worth of equity and $5,000 worth of buying power. And if you split that into 2, that's further reduced. So you're only then with $2,500 with buying power, which means you have to be very strict on what you're taking and the trades that you're taking. So it's not right for most people. It's not a good option for a lot of people with small accounts. Particularly if they're getting charged commissions on their accounts. In North America, that's not usually a problem because a lot of brokers are offering free commissions. Not so much outside of America, particularly in the EU, we do get charged for decent brokers charge commissions. The other option, the other way of getting around it, if you're in North America, is trade with an offshore broker, like the likes of who I trade with, which is Capital Markets Elite Group. So they're based in well, my contract is based with them in the Cayman Islands. They have options in Trinidad and Tobago, but they also now have a UK arm and various other things. So if you trade with an offshore broker, they won't enforce the PDT rule because they're not subject to governance under the US financial regulator. So that's another way of avoiding the PDT rule. So what did I trade today? I traded KE Holdings. It's the top gapper at the moment. Its ticker is BEKE. We managed to get in, and I talked through the trade a little bit earlier, so you missed that one. But if you're watching on YouTube, because I know you sometimes do like to watch on YouTube, Alistair, but If you're watching on YouTube, you can actually see it on the 5-minute where we got in for this break of 1320 and rode it up towards 1370. I think we got pretty much rejected at 1370, and I then ended up getting stopped out at 1343 or 1344 or whatever it was. 1330, yeah, 1343, 1344, something like that. So yeah, it was got stopped out, but we'd already made the money then, so happy days. So we're just getting a period of consolidation before the market opens. We've got 15 minutes to the bell. Okay, so someone asked me about IXHL, which was the one that was moving on low volume yesterday. I'm going to pull this up on the charts now. So it's Incanex Healthcare. It was moving on low volume yesterday, and I said that the erratic way it was moving, it was up, it was down, it was like a newlyweds nighty, newlyweds nightgown. It was horrible. It was exciting. If you were trading, it was exciting, but it was so unpredictable. It was getting halted up and gapping up huge amounts. It was getting halted down, gapping down huge amounts. It was on low volume. The spreads were like $5 and $6 spreads. For a $30 stock, $40 stock at one stage, you know, as it started off the day, a $5, $6 spread is huge. It's scary stuff, particularly when it was gapping down $10, $12. You just couldn't. I couldn't see any entries to get in there and trade it. Now, today's volume, it's already traded nearly 500,000 shares, so we're getting quite a bit of volume on it today. It traded just over 1 million shares yesterday, so it's traded half as much today pre-market as it traded yesterday. And I did say this yesterday during the stream. I said that now the people will have seen the action on this particular stock. We may get a continuation day tomorrow where it will have higher volume and the movements will be a little bit more predictable. So it might be worth watching for a potential a continuation today. Now it's down on the day, but it made such a big move up yesterday. It made huge moves yesterday. It finished. It closed on Monday at 22.90s. It went up to $90 yesterday. So, you know, that's like 500% or something like that. So 400% gains, which is madness, particularly when it only traded 1 million shares the whole day. And it's not as if it's a tiny float stock either. You know, if I pull this up in terms of the data, it's not like it traded 1 million shares and it was it was a 500,000 float. It's got 48 million shares outstanding. So a million shares, it was low volume for the size of stock that it is. But it was, you know, it was an IPO in February, as far as I can see. And because it was an IPO in February, a lot of people wouldn't have heard of it. So it's hit the news yesterday or last week, last Thursday, I think it was, with its cannabinoid product for sleep apnea, and it's just starting to really get the public's imagination. So don't be surprised if we see some more volatile moves from it today with higher volume. I think we'll see a lot more volume on that today. So I'll just keep Becky back on there so we can do that. Okay, no, I'm not trading data. Canon. So funny enough, we're just talking about that's now as of the last IXHL. That's just popped up to 26 there, rejected. 25.94. So I'm just going to put a little horizontal there for today's high of day, 25.94. Where did we get some resistance yesterday? So we looked at 33s. It's been consolidating around the $18 level here. So it could be one to watch. So right now, the next resistance level here after this high of 25.94, we're looking at 33. So the high of the morning high is 25.94. The post market after hours yesterday, it's kind of 33.60s, 33.99. Sorry, we're looking at $34 is the post market high, but it didn't want to go over. But I'll come back. I'll keep an eye on that one. JD. So let's have a look. So there's a lot of action today. So we've just got to be very selective. I think as a day trader, we should be chasing the crowds. We should be following the volume. And I don't think it will go up to 90 again, Michael. I'm not saying it won't. It very well could, but I severely doubt it will. Just the movement on something like that yesterday, as I say, it was very. Where did it go? There it is. So the movement yesterday was so erratic. If I look at it on the 30-minute chart from yesterday, we moved up really quickly pre-market, came all the way back down, kind of underneath the 30s, then moved all the way back up again to 70. It actually, out of the gates in the first 30 minutes, it went up to kind of $90, then pulled back really quickly. So, and then it gapped down. We saw so many gaps up and down. I mean, we had so many halts yesterday with this one, but it was none of these candles. These are 30-minute candles, and we've got volume of 22,000 shares, a volume of like 40,000 shares. There's none of these candles are over 100,000 shares, and it's a 30-minute period. You know, it's like, what? How can you move with so much volatility and nobody's trading it? There's no shares being sold. It just defied belief. Not a single one of these 30-minute candles is like 100,000 shares or more. Now, if you take Indonesian energy that I was trading previously, for example, that was trading last week, and you could get 100,000 shares in a minute. So when we're getting a high traded stock, we tend to get the volume, a highly traded stock. You get a lot more predictable moves. I like the volatility that it had yesterday, but it didn't have the predictability. There were no patterns to get in terms of breakouts and pattern formations. It was just so erratically volatile. So yeah, I like the volatility because there's opportunities to make money there, but I'll prefer to manage my risk and not trade something like that, because the lack of volume makes that volatility unpredictable. Yeah, but could it go back up to? Well, it started pre-market yesterday. So post-market, it was down at kind of 20s. On Monday, we were looking at what? It closed out Monday at 22.90s. It's currently trading at 20.55. So it went up on Tuesday to $90. Could it go back up to $90 if it follows similar kind of momentum, a similar kind of volatility? Yeah, it could. But there's already a lot more people trading it today than what there was yesterday. So what I would say is for every buyer, there's got to be a seller, which means that for it to move so erratically, in such a short space of time on low volume, you can get those erratic moves on low volume. You're less likely to do it on higher volume because you're getting as many people that are selling as you are buying. You're getting people that are shorting it if they can. I don't think you can short this one, but I'll double check. Is there a short float? No. There's no short float, so it's probably hard to borrow. I'd have to double check on the list whether it's hard to borrow or not. But yeah, I mean, the question is, do you want to risk it on low volume? And I would say no. So for me, it really is one of those. Let's wait till it. Let's wait till it's on a higher volume. Okay. All right, so we've got 2,000 likes. That's not too bad for 20 odd people. You know, we're let's see what we're doing. What's moving now? Let's go back to Becky. That's below that 1320 level that it was consolidating under before, so moved up. Still above the VWAP, so it's still of interest. AC's just now below the VWAP. Yin's barcode, I'm going to change that one. I want Yin. Get rid of Yin. I don't know. I'm just going to get rid of Yin. It's a derivative stock. That's why. I don't even know why I had that on in the first place. ADD, we've got Billy, got EDL, we've got GDS Holdings. Just to find something that's trading up well with good relative volume. I put Tiger on here. I'll put Tiger on here. No, don't like that chart. TH2, let's have a look at the chart. Absolutely not. So you take a look at the chart and you don't even have to look at the fundamentals. Very often you can tell whether it's being actively traded or not just from the blanks that you get. So Neo is actually being well traded today. It's relatively speaking, it's not different from any other day. It's just gapping up on in line with everything else. But Xpeng and Li Auto and there's a few of those Chinese EV manufacturers that are having a good day today. So there are a few EV ETFs that are probably having good days today as well. What about Chinese education stocks? I wonder how they're getting on. I had some fun with the Chinese education stocks last year, probably about in the summertime last year. They all moved up really, really high with high volatility. Good money. have a look at the Canada. That's a better looking chart. Let's have a look at the data on it. 170 million shares. I don't mind that. That's ideally we want to be looking for 100 million shares or less, a small float. 170 million. We can work with that. We can work with that. Is this just another one of the? Okay, so Canaan approves 100 million share repurchase program. So that's why that one's moving. Q1 outlook expected to be impacted due to the delay in delivery logistics as a result of the recent COVID-19. Okay. So I'll put Canaan on the watch list. Let's have a look at it. So we missed that window. Okay. On the daily. Let's have a look. Got a lot of support around 480. Support and resistance around the 490. 480, 490. Touched quite a lot there. And the market is open. So I'll move these to regular hours and let's see what pumps. And I would say there's probably going to be a lot of them. So let's watch. Keep an eye on the scanners. Top gapper is currently Becky, but it's selling off at the open. Don't mind a sell off at the open. As I've said before, as long as it makes that red to green move. Okay, so this sold off and now it's popped up and popped back down again. Well, that's a quick entry. Take a little bit of profit there. Move up. See this testing those pre-market highs. Been a lot of volume on this one. Not really moving up as well as I wanted it to, but come on. Here we go. So 68 is the pre-market high. Watch that. So we're in for 5,000 shares at the minute. I want to see it break 1370. This is KE Holdings, Becker. This is the one we traded pre-market. Was the top gapper. And we're just approaching the pre-market highs now. So I'm going to take breaks 370. I'm now going to look for an entry position and add. So add there. Take a little bit off. So add to get out again. So still 5,000 shares. Alt level 1464. So we're a little way off that level. Don't mind this. So 1350 is our exit. 1350 is where we exit. Pulls back to 1360s, we get worried. If it pulls carries on, I might just buy a bit more here on the dip. 1350 is our exit, so down to 1370s. Just watching this now, 1368, 1365. Like I say, 1350 is our exit point on this trade. Start to move up, I will add back. Right, we're out. Okay, so that was a good trade. Good trade. So we're now 3,000 up on the day. So I'll show that trade. The ones in YouTube have already seen that, so I'm just going to show the entry here. So we're looking at this. It pulled down, started here, and then it pulled all the way back down. So it started here, moved up, pulled back again, and then as it moved up, I wanted to break this level here. That's where I entered. It moved up, and we took a little bit of profit there and rolled the rest up. We took some more, we actually added to our position and then took some more profit there. So that moved our average buy price to 1350. It's actually 1352. So that became our new stop. As it moved all the way, as it pulled all the way back, we got stopped out on the remainder. So that was kind of where we break even. So you know we've moved up with 3,000 in the green now. So that's a good start to the day. I'm going to keep going like that. A few more trades like that. Let's see. I can. It's just moved up. Just halted. Okay, so that was on good volume as well. 683,000 shares in that 15-minute period, in that 5-minute period. So that just halted up. So that's on the watch list as well. Swap it with DDD. So there's a bit of a sell-off now. I don't mind a sell-off. A lot of people taking profits. If it's a complete change in sentiment, that's one thing. A sell-off's one thing, but a complete change in sentiment is another. So the whole red piece, if it doesn't turn around and we've made $3,000 on the day, that's a good day. We're green on the day. So that's a good start 5 minutes in. Now, Akan is the one that's halted. I'm just going to get rid of these session highs. I just want to see the halts and resumes at the minute. So I'm just looking for where the volatility actually is. So WNW. Well, that's 32, 37 that we should see. So in a little over a minute, we should see the resume on Akanda. It gives me enough time to check out the key data. So 28 million, that's not bad. So that's just resumed. So that's not a bad size float. 11 million float. And look at the news on this. Candacorp, successful first days. Now it's recent IPO from yesterday. So let's have a watch at this one. $14. Pre-market high here of that's the key level for us. 1479, 1480. Halt of 1572 now, so looking for the break of the high. Pre-market highs. Now got an opening range high, kind of just over 1450, but it's the pre-market highs that are important with this one, it being an IPO stock yesterday. It sold off most of yesterday, so for it to rebound today would make sense. Houston American Energy 9, and Servco, the old Indonesian Energy, those old chestnuts are all coming back onto the scanners. So energy stocks are starting to hit the scanners. It's going to be a good day today, I think. Well, I don't know about a good day, but it's certainly going to be a volatile day. We're going to get the break of the pre-market high. That's the question on this one. Just waiting, just watching. While whilst the Chinese stocks have had a bit of a dump. Just see if we can't. We're getting a lot of volume on this candle, so I think we might test that 1480. 30 cents to go. The $half level. So just for those who haven't been on the stream before, quarter, half, and whole dollar levels are very key psychological levels. So to be getting resistance at a $half is nothing unnew. It doesn't mean that it's a key level of resistance. It's a psychological level of resistance. So we keep getting above it, but and you've got to understand that these resistance and support areas are exactly that, areas that it's not accurate to a penny, because different people. I missed the entry. Why did that not buy? Okay. I want to see this up there. I'm going to take took 5,000 into a halt. What's the halt? 572. Yeah, we're into a halt. I wanted to take a position for the break of high, and I got filled, very, very poor fill, but we're halted. So we're in this halt again. I'm going to put a trailing stop on this because I don't want it to gap down too much. I'm going to put a 25 cents trailing stop. Won't let me. It's just typical. Okay. Never mind. Okay, let's have a look at the chat. So, where's what have we got in the chat? Are you going to short yin? No, I'm not shorting yin. What Lee Auto? What's your favorite wheat stock? The one that makes shredded wheat. Which stock, guys, is Akan? So it's Akanda. AKAN. We got in for the break of the. It's a recent IPO. We're still in the trade right now. We've got 5,000 shares in there. We tried to buy for the break of pre-market high, which was 1480, and it moved up. We got filled on average at 1550. So and it's now 1572. So we're 25 cents to the good. But this is, it's gapped up, and it's not gapped up, it's halted up, and it's an IPO yesterday, and I don't want it to kind of pull back and stop us now. So we've got a bit of a cushion anyway. We're currently $1,600 unrealized, so that doesn't mean anything. You know, we've not made any money until we cash in, until we sell. So this is due to resume at 9:46 market time. We've got another 2 minutes to wait. We're up at the moment. We're about 3,000 in the good realized so far, and depending on this this particular thing, it's looking like it's going to gap up. It might level 2's telling me it'll gap up, but I can't take that for granted. So I'm ready to make some quick decisions and get out quickly if necessary. The symbol for this IPO is AKAN. That's not a stock pick, it's not a signal, it's just me informing you that I'm trading this particular stock at the moment. And it's an IPO yesterday. I only use MACD or RSI if I'm trading reversal strategies. If I'm trading reversals, which usually tends to be at the end of the day, then I might use those, because those are more advanced technical indicators. So typically the main indicator that I will use on any given day when I'm trading momentum strategies, I'm using gap and go today. But the momentum strategies will be the VWAP. So we've got a minute left on this volatility halt. I want it to gap up over 16 would be nice. Yeah. Okay, so just got out of there. It gapped up for us, and we just made $2,000 on that one. So I will. Hey, baby, you back? I'll show you that trade in a moment if I don't get back in. I'm looking for another entry into this one because it's showing a lot of volatility. 1813 is the next halt level. I'm looking at getting in on a pullback maybe if it breaks the high. So I've just got in there for the break of high again, and I got filled. So for the break of 1813 is the halt, and we're halted up again. Was it a false halt, or are we going to get halted? Okay, is that a halt or not? Yeah, we'll halt it again. Okay, so I'll show you the trade. We're in this 5,000. We've just added back in for 5,000. This is volatile trades. IPOs can be quite volatile. So we originally got in here. So the pre-market high was here. I marked the pre-market high here. So we looked to get filled here. We got a bad fill, and we were in at 550. Okay, so it actually comes in as two buys, but it was only the one. We got slippage. Then it halted up at 578, I think it was, so whatever it was. So then it moved up, and we took profits at half off here. When it started to pull back, we took the rest off here. Then it moved up on its pullback, I looked to get in for the next break of high, the next time it made a high. So that was here. So that's when we entered, and it's just halted up again. So I will only be taking half off this time, as it hopefully will be moving up at 850, something like that. If it gaps up to 850, take half off and then see what happens. So we're currently right now 5,000 to the good. 5,200 is the net trade profit and loss. So sometimes you've got to take your chance, and you've got to move quickly because they don't wait for you. So how's the project going this month? I'm not sure what you mean by project. How's my trading going this month? Well, we're green on the day this month. Oh, so we're green on the month. We're green. Don't be gapping down. Yeah, so this is looking like it might gap down. 1788 is where we are. It's my level 2 saying 1790, so that's pretty much where I am. So I want it to gap up, not gap down. So just got to be careful with this one, but it doesn't move. So when's it resume? It's going to resume at 53. So we've got 3 minutes left. Okay. What am I trading at the moment? I'm trading Akanda is the name of the stock. It's an IPO yesterday. It sold off pretty much the whole day yesterday, but today it's gapping. It's moving up quite steadily. It moved up out of the blocks at the open, and we had a little bit of profit taking at the bell. Then it moved up into a halt, a bit of a pullback, moved up into a halt, gapped up. Now it's moved up and into a halt. So I'm just looking at where we're actually at. This looks like it's going to gap down. So I'm not too overly worried about it gapping down right now, because as long as we get the volume and it gets bought right back up again, that'll be fine. If it gaps down too much, it could pull all the way back to the VWAP. I mean, for 5,000 shares, the VWAP is like $4 away. So 5,000 shares and $4, that's $20,000. So I don't want to be pulling back that much. So we've got 5,000 cushion on this. So if it does gap down, I'll either look to add to the position if I have to, or if I think it's going to move straight back up again, or I'll look to cut the position. But whether that eats into the profits or not is something that we'll have to address when we get when it resumes. So it's always risky when you're trading stocks volatile enough to halt. The Chinese stocks look to be making a comeback now. So they sold off for the first 15 minutes of the market, and they're all kind of back up where they were. So there's definitely opportunities to make money here. Today it's a volatile day. There's definitely opportunities to be making money today. 100% Rasper. So Rasper says, for those that are not on TikTok, for those in the other on the other streams like Twitch and YouTube or on Twitter, Rasper's telling me to don't buy anything out of boredom, and that's great advice. Boredom trades will very rarely go your way. Okay, so that way, I'm just going to take some profits if it moves up. There we go. So I'm going to get out of that one for another $2,000 into the good. So what I did is when that started, it opened up, and it opened up pretty much level, but then pulled back. So I cut half my position at break even, and then rode it up for the next bounce. Now if it breaks 20, I will enter again, but on smaller size. So I don't mind the pullback here. But that's great advice that for any newbies. Don't be taking and today there's no reason why you should be taking trades out of boredom. It's a great trading day today. There's so much volatility in the market today. There's so many stocks gapping up and they're moving on good volume. So there's no reason why you should be short on short of options to trade today. So I'm just watching this for another entry point. I don't mind the pullback. That level of consolidation is good for us. It's gap down now. So that gives me, it's looking like a gap down. So that gives me a little bit more chance to talk to the stream. 7,000, yeah, that's the gap. So whilst I'm waiting for that to resume, I can talk about I'll show the trade in TikTok and the guys. I'll talk you through the guys on the stream on YouTube and Twitch. Okay, so this is where we entered previously for the break of high, and it went up and halted. Now it resumed here. So it resumed at just over 1813, I think it was 1818, and then started to pull back. So what I did is I took off half of my position, reduced the exposure at break even. So rather than giving it the 10, 15 cents, 25 cents risk or whatever it is that I was playing with, I just took half off at break even. And I rolled the rest up for effectively a dollar's gain. So that's 2,500 shares for a dollar's gain. So that gave me another 2,000 something in profit. So that on the day takes us to over 7,000 in profit. So it's a good day so far. We're having a good day. Now, what it subsequently did, it was rejected at 20. It's sold off and it's now halted on the way down. I don't think this is done. By any stretch of the imagination. I think there's a lot more to be had out of this, either up or down. I think we're going to see these kind of moves all day, not just in this one. If I look at the watch list, you can see that these are the Chinese stocks. This is one we were trading to start off with. We traded first thing, and then it sold off, and it's made a recovery. Now it's back up at the highs of days. So potentially we could get in that one, but same thing with all of these Chinese stocks. They're all, doing really well. I mean, JD's halted so a couple of times. So that's on the 1 minute. So yeah, so they made that sell off, and what they're doing is this red to green is pretty much the same move on all these Chinese stocks. So yeah, it's a volatile day. There's opportunities for everybody. Today is a good day to trade. Avoid FTSE. Absolutely. There's no volume on the FTSE. I keep saying that. People ask me why do I not trade the European markets? There's no volume. It's terrible to trade from an intraday perspective. You can swing trade those, you can invest on those, but from an intraday day trading perspective, just stay away from the FTSE. Okay, so Beckett is approaching its high of day now at 1408. And next resistance level is 15. So Becky could be interesting. I'm just going to go back to Akan. I like this one. I want to concentrate. It's now the top gapper. So Akanda is the top gapper of the day now. So we're looking at 64% up. The two top gappers of the day, which is 64% and 54%, are Akanda and KE Holdings. Those are the ones that we've traded today. So this is what I was saying pre-market is today the biggest challenge you're going to have on a day like today when there's so many gappers, there's so much volume in the market, so much volatility in the market. It's great for day traders, but the biggest problem you're going to have is stock selection. You're going to be spoilt for choice. Don't succumb to this kind of shiny toy syndrome where you're looking for the next one. Find something, ride it up. When it's done, when the moves are done, then look for the next one. Don't be distracted because something else looks like it's moving quicker. If something's moving quicker, let someone else make money on that. If you're making money on a particular stock or a couple of different stocks, you make your money. Don't worry what other people are doing. Just Okay. Well, you don't get you don't get the stocks on the FTSE that are on the Nasdaq. If they're listed on the Nasdaq, they're listed on the Nasdaq. If they're listed on the NYSE, they're listed on the NYSE. They're not listed on the FTSE. So it's different stocks. So right. So we've just gapped down. I want to see where this goes. Do we get bought back up again? Oh, missed that one. See the break of 17. Keep getting missed. I keep missing the opportunity. All right, now we're in. The break of 17. See this move up. Break of 18. A little bit off. Oh. Got an order there at 17.50 to sell. Get it? No, got partial fill. Oh no, got a full fill. Okay, so this is looking a bit more volatile. Just taking some profit off. We've still got 2,500 shares. Want to see make a move above $18. See if we can't ride this up. Okay, take a bigger size. The break of $18 and move up. Nice. Meeting some resistance at $18. So we're getting bigger spreads now on this one as well. So just be careful. Okay. 60. Yeah, okay. Well, the spreads are moving. The action's not, but the spread is moving. But just be wary that the ask is where I've got in, and I'm right now there's a 20 odd cent spread, which basically means that I'm in the hole. I want to see this above $18. There we go. That's good. That's better. A bit of volume. Take a little bit off. Didn't get filled. Okay, there we go. Partial fill. Another. I got filled. Finally got filled. That's a little bit more profit. Let's see this back up and retesting highs. Retest highs. Like I said, I don't think we'd seen the end of this one yet, but 1760 is our exit point. That's our average buy now is 1763. So if it comes back that far, that's when we get out. Otherwise, we're just going to ride this up or exit for break even. I want to see this above $18, not hovering around $18. I want to see this back up towards 20. The high of day so far is 1990, so I want to see this test 20. Okay, we'll get out for break even there. Okay, so that's not bad. It pulled back a little bit too far for us, so I'll watch this consolidate. It may move back up, so next entry for me is probably going to be 1850. I'll keep an eye on that, but we're currently just shy of $11,000 in the green, so it's a good day so far. 10,800 is the is the level that we're at the minute in the green, so we're doing well. $10,000, it's more than we lost yesterday, so we're now eating into Monday's deficit. So it's a good trading day today. $10,000 on any day is a good day. You can't complain about a $10,000 day. So again, what you've just got to do is when you make profits, when you get into a position and it's profitable position, you take half of the position off, so you've got a little bit in the bag. You can add to it later if it's going your way and make a bit more, but secure some profits, take profits. And that's what I didn't do. That's what I didn't do on Monday. Is I got into a position and wasn't take. Oh, yesterday I was didn't take profits when I should have done. So you take some profits, and then when you take profits, you adjust your stop to break even. So if you reach your entry point and it goes below that, depending on the pattern that's setting up, if it's setting up and it looks like it's going to move back to the upside, then you might add to the position and buy the dip. But otherwise, you just exit at break even. You can always, if it does decide to turn around and reverse, you can always get back in again later. So, like right now, I just exited at $18 because that was then the break-even level. So took profit at 1850s and exited at 18. So that was our break-even level for the kind of second half of the trade. So we made profit, but now it's pulled back all the way to $17. Now, if I'd held that, I would have just gave back my profits off the top. So I can watch this now, maybe pull back to $16, around where the VWAP is. The VWAP is 1610, and then look for a bounce on the VWAP. So I'm now looking potentially, looking at the 5 minute. I'm looking for the next to see if a potential bounce on the VWAP comes on. The next green candle to make a new high will be 1722. But if it falls below the VWAP, it breaks below the VWAP, then it starts to exhibit kind of downward trend tendencies. So it then becomes something I'm not really that interested in. Okay, how do taxes work as a trader? It depends where you're located. So if you're sitting in Gibraltar and on the rock that's the south side of Spain, you don't have to worry about it because there's no capital gains tax in Gibraltar or the Isle of Man or the Cayman Islands, anywhere in the Caribbean. There's no capital gains tax in Puerto Rico. So if you're a trader and you're profitable in the US and you want to sit by the beach, think about moving to Puerto Rico. That's another way. So set up your business in somewhere sunny. Most places you have to if you hold an asset and you sell it within the first year, then you have to pay top rate of capital gains tax, which is also another reason why you should trade under a company as opposed to in your own name. Speak to a good accountant. They will advise you. There's a number of ways to reduce your tax liabilities, including offsetting all your expenditure, offsetting all your expenses. But my swift piece of advice is wherever you're sat, is that where you want to be for the rest of your life? and it might be that you, if you're trading, making profitable trading, you want to be sat in a cold, wet, grimy area wherever you are, or do you want to be in the sun? Well, if you want to be in the sun, just move to a location that is friendlier to traders, and you won't have to pay any tax. No capital gains tax. You're less likely to get hit by that. But then there's the other thing about tax liabilities. Just my advice is speak to a good accountant. Set yourself up and set yourself up as a business. You know, form an LLC if you're in the States, and a limited company if you're in the UK or Ireland. And rather than just being self-employed, set up an LLC, a limited liability company, and trading under that. And your accountant will, and you can get a lot of benefits, tax benefits as a small business that you can't get as an individual sole trader as well. So just bear that in mind. Okay, I think this one's done for now, so I'm going to go back to Becky. Right, okay. So we were trading this earlier before at the start of the market. So we're 10,000 in the good, which basically means I can scale back a little bit now and just look for the quality setups. I've got a cushion. If I give back now 50% or if I give back 50% of my gains, I'm done for the day. Well, right now, my max loss is $5,000 from any point of today. So I know today I'm going to be walking away with at least $5,000 in profit. And you've got to have that mindset. You move your bar the same way you would in a trade. Is once you get profitable and you take some profits, you move your stop up to break even. You do the same thing on your trading day as well. Is once you've got some in the bag, you then scale back a little bit and just take the good setups. And then if you do start to give back profits to the market, you make sure that you finish green. Once you get green, stay green. That's the key. So I'm trading with Capital Markets at the moment, and the broker is that's the broker, and the platform is Trader Pro. So breaker $15. What's the spread on this? It's tight spread. Don't fake me out. You just broke 15 bucks there. Don't be pulling back on me and faking me out. I want to see a bit of volume for that's the high of day. $15. I know it's a psychological level, 00, whole dollar. I'm only going to give you 10 cents. There we go. I want to make 20. There we go. I was risking 10 cents on the share to make 20. I've just taken profits there at 17. 18, I think I got filled. Still in for 5,000 shares. So now $15 is our break. Is our breakout. If it pulls back, we exit at $15. I want to see this up towards $15.50. If it gets to $15 and breaks $15, we get out. That's our entry point. So that's when we get out. We'll break even. We've already taken half of our profits. We got 20-cent move. We're taking half of our position off at 20 cent. We were looking for it to continue to move up, but it's now a little bit of a pullback. So our stop is adjusted to break even, which is $15. If it sinks below $15, that's when we exit the position in its entirety. Otherwise, we just hold for now to see if it does go back and retest those highs. If we're confident and we see the momentum coming in, I'm not seeing the volume coming in at the minute, but if we were confident and we saw the volume come in, we could add to the position, retest those highs. I want to see this up at 1550 before I add to this position. I want to see this over 1530s, testing 1550s. Right now, consolidating. I'm just going to get out there. Okay, so we've just added another couple of thousand onto our position. So we just took a position, and I'll show you this one on the entry here. So we took an entry there, put 5,000 shares for the break of $15 as it tapped $15. Okay. Now I thought it was going to fake me out because I didn't get the push straight away, so it pulled back a little bit. I was going to get out at only risking 10 cents in the share, so I was going to get out at $14.90, but it went all the way up to $15.20. So that's when I took half of my position off. So I still had 2,500 shares in there, and it's just consolidating sideways. So rather than holding for consolidation, hoping it retests the highs, I can always get in again at this kind of 1430 level, the break of 1430. I just took some extra profit there instead and exited the position. So now we're kind of $12,000 in the green. So that's a good day. It's a good day. So, guys, 60 people in the chat. Everybody, give me 10 likes in the chat if you're learning stuff, if you're enjoying the stream, if you're learning anything. Give me 10 to 12 likes. Just helps with the algorithm, and we'll appreciate it. So, how much did I buy the 5,000 shares for? So the 5,000 shares are currently, I bought there at $15. $15 at 5,000 shares, or 5,000 shares at $15. So that consolidation just broke downwards. Now it could have gone back up and retested for the break of 1530. So I'm just going to move this now, this line up here, because this is now the high of day, which is 1530, 1529, 1530. And I mean, if we can retest that. So Akanda, we got out of that at the right time. It's gone below the VWAP. It might come back a little bit later, but that's way below the VWAP now. Trading at 1420s. We're seeing a lot of similar patterns across the board. I'm trading KE Holdings, which is BEKE. It is the top gapper at the moment. And Akanda seems to have dropped off the. It's pulled way back, so it's where's that now? It's down at still 30% up on the day, but it's way down the list. There's so many gappers today, so many to choose from. There really is, and even on the momentum scanners, we've got some good opportunities. So, but with regards to this particular one, what were I reading? Trading. Oh, what was I trading? So this one was KE Holdings. So BEKE is the ticker, and we just got a quick scalp on that one. So it pulled. The reason for that is we made 4 consecutive 1-minute candles to the upside, green candles. Then we had a little bit of a pullback. So that it was rejected at $15. So that pullback was 2 red candles, then it went up again. So I got in there for the break of that high of $15. So it was almost like a bull flag, was what the setup was. But then we got the break of the high. Rather than just getting in at the break of the next candle to make a new high, I got in at the break of the high because they're relatively close together, and rode it up to 1520s or 1525 or whatever it was. So I gave a 10-cent risk on the, and I called that out. It's 10-cent risk to 1490, and the reward was 20 cents. So I took half my profit off at 1520. Now, because I do that, if I took all my profit off, that would have been what would have been classed as a perfect trade because of the 2-to-1 risk versus reward ratio. But because I kind of like to scale in and out, I took half my position off with a view to it moving higher, so I'm not actually losing out on the upside of the move. As it stands right now, there was no upside of the move. It only went up to another 10 cents. Now, potentially, I could have got another 10 cents out of it, but you're never going to get the full top and bottom of a move, so you've got to accept that as well. So that was BEKE. What do I think of Copal? I'll just have a quick look for you. Are you sure that's the right ticker? Symbol not found, I've got. Let me pull it up on TradingView. Might be on a different exchange. Canadian overseas. So yeah, it's on the London exchange. So I don't think too much of it, simply because I don't trade the FTSE. I don't trade the London Stock Exchange, and that's on the hourly. That's just been selling off. So let me have a look at it on the 5-minute for you. I'll give you my opinion. There's just no volume. So this is why I don't trade the FTSE. If I'm looking at the there's just no volume in that Canadian Overseas Petroleum Limited. Now, energy stocks are having another good day today, as well as the Chinese stocks. And this is an energy stock, and because it's on the London the FTSE, the London Exchange, the LSE. There's no volume. There's nobody trading it. At all. If I look at it on the daily, let's have a look at the what is the total volume today. So 1.5 million shares traded across the whole day. It's trading sideways for the last couple of months. You know, it's ranging sideways, but from an intraday perspective, which is what I'm looking for, from a day trading perspective, there's no trade there for me in Copal. Sorry, Rangers, just no trade there for me. Okay, so we're consolidating here. We're getting support on the kind of $15 level. It was resistance. Now it's acting as support. It's $15 area. So my question there is, does this break down? Are we getting kind of a flat bottom at 1490? It appears to be so, which is a very bearish signal. And we're getting the downwards descending wedge to that flat bottom. So don't be surprised if this breaks with a bit of volume to the downside. Just did break, but only by a couple of cents. So that's not the break I was expecting. That was a bit of a fake out for the downside. Here we go. There you go. Oh, that flat bottom. So again, that's the power of technical analysis. So we see this resistance level here. If you're watching this on YouTube or Twitch, you can see what I'm talking about here. So you see this resistance level here at $15. We saw this on the way up, and this is where I got in. So we saw it tapped it once, it tapped it twice, pulled back and consolidated. And then on the third time of asking, it broke through, and it broke through with volume. You can see this big candle here, how it breaks through with volume, goes right up past $15 and up to $15.30. So we get a 30-cent swing to the upside before it starts to pull back again. Now on the downside, we then start getting this this descending wedge, if you will. It's getting a flat bottom at the 1490s. Now we're getting lower highs, but we're getting this consolidation at 1490 as the bottom part of it. Now it just broke down towards 1480s, 1483, but didn't. We saw a little bit of additional volume come in at that time, but it didn't continue down fully. So is it going to climb back above $15 and then continue consolidating before a move to the upside? We'll see. But the power of technical analysis here, you see the signals, you know, what are bearish, what are bullish, etc. This little bull flag here, I could have got in a little bit earlier. Cancel. Could have got in a little bit earlier here. I could have got in at 1492 or something like that if I'd really thought about the next candle to make a new high. But I wanted, because the high of day was so close, that high of day was also a resistance. So was I really going to take, you know, a position with a move 8 cents into resistance? Not really. So when you take a position, you've got to look at where's the next resistance level. That's a key point. I'm looking on the daily now. The next resistance level here, significant resistance level, we're getting up towards $17. So 15, there's a big way from $15 to $17. So if this moves to the upside and breaks highs again, we could see a good move from this one. What happened with Canada? I sold off now, so I don't expect a huge amount to come from a Canada now. So I'll continue to have a look at what's actually happening elsewhere. So now the strategy changes from the gap and go strategy to the momentum strategy. So we've traded the first hour. We were looking at the gappers. We were looking at where we could make our money, and we've done that. And then we've had a couple of red to green moves on the Chinese stocks. KE Holdings was one of them. So now I'm just looking at momentum stocks where we're getting some significant volume, as well as exhibiting bullish trends. So if I look at Joy, this is another one of those Chinese stocks. Let's join the momentum. Have a look at the 77 million shares. That's not too bad. Like I say, I like to look for float size less than 100 million. And 77 million certainly meets that criteria. So go back to now we're getting a downwards channel. So if I just draw just from a technical analysis point of view, I'm just going to draw this red line from here that way, and I draw another one at the bottom here, and we're getting this see this channel here, downwards channel. So from the candle, it made the high, and it's tapped a couple of times on the bottom of this, and it's tapped a couple of, tested a couple of times on the top of this. So I'll watch this channel for a breakout either way to see if we get to, because it is still in that $15 area. So it is consolidating sideways, but like I said, we're just getting that downwards channel. So we may get a break upwards from that. Now I'm seeing a lot of these Chinese stocks are still moving to the upside. So KC, Kingsoft, is not one of the Chinese stocks, but it's the third largest gapper, and that's up at 520s. We want to look for an entry here, because I mean, look how extended this is right now. On the 5 minute, we've not had a single red candle since 9:45, 9:40. So we've moved what, $1.50 nearly in that time. So GitLab, We lost on GitLab yesterday. Just looking for an entry here and I can't see one. AC is the one that seems to have now taken over. Let me have a look at what the catalyst is here. The Q4 earnings, that doesn't make much sense. It's another one of these Chinese stocks by the looks of it. SE Cloud, but this is a much higher float stock. So we've got 240 million shares outstanding. So the fact that it's got 240 million shares and it's moving the way it's moving means that there's a lot of people trading it. And if I'm looking at the scanners, I can see that currently we've traded 13 million shares on this one. So it's second behind. Oh no, it's not. We've got a lot more down here. And Pinduoduo is 33 million shares. Becky is the KE Holdings is the highest traded at the moment from the top gappers. But Kingsoft is also one of those. Where's the volume? Let me have a look. Of the last YNM. Why is that getting a lot of volume? The volume is with KC at the moment. I don't mind this pullback. This gives us an entry. It gives us an entry possibility. This candle is 44. Cents. We got it at 46. We're out at 35. Give it 11 cents. I want to see this retest the highs. Okay, we get out at 35. Yeah, that didn't go our way. So we got in there for the pullback, and it faked us out. So we got in at the candle made the new high. We got in, and it just didn't have the follow through. So we got out with the 10-cent risk, and that's the thing. If you're going in with 5,000 shares, you're only risking 500 bucks if you're risking 10 cents. And now it's pulling back a bit further. So I'll give that a miss. I think. I was waiting for the pullback, but when I got the new high, it just didn't go my way. So we have the cushion on the day. We're still over 11 to the good. So that's as far as I'm concerned, a good day. And we're going to be finishing green no matter what now. This is where the volume is. This is where the momentum is. This is the top stock on the on all of the scanners now. So this is the top gapper at the moment with 68%, 65%. It just pulled back. It's the top gapper over the last 15 minutes, over the last 5 minutes, and it's got the most volume over the last 5 minutes. So this really is where we've got. I mean, it's granted it's a little larger float. So I want to see this over 540s now. It's pulling back, so I don't mind this. Actually, looking at it on the 5 minute, if I look for confirmation on the 5 minute from the 1 minute, on the 5 minute, this is the first red candle. 1, 2, 10 green candles in a row on the 5 minute. So, of course, it's going to be extended. Of course, we're going to need a bit of a pullback. So let's see. Let's watch this candle finish forming, and the next 5-minute candle to make a new high. That's where we'll get in. Right now, the high of this one is, so we're looking at 550. Is our next our entry. All right, back to the chat. Wuling jumped 10 cent. The thing is with 10 cent, it's such a huge float. I mean, all of these Chinese stocks are making moves up, but not all of them are good trades for day trading. 10 cent is a very heavily traded stock. It's a huge float, and the volume's huge all the time. So from a relative volume point of view, we're still not, it's not high relative volume with 10 cent, but it is having a good day. Alibaba's having a good day. Walmart, Great Wall Motors, Xiaomi, they're all of these Chinese stocks are having a good day. So, pick your stock, choose your poison, but look for the setups, look for the patterns. Don't just jump in willy-nilly because you're chasing the momentum. Look for the patterns. Okay, so we've now got a green candle. I want to see this above 530s. Seeing this areas of consolidation that 530 is an area that I want to see trading above. I don't mind 2 or 3 red candles on the 5-minute. Maybe the next red candle to make it, next candle to make a new high, 5-minute candle to make a new high. So it'd be over 530s really is what we'd be looking at now. So yeah, so guys, if you want to learn how to do this, I can teach you. There is a course available. We're now 11,000 up on the day. If you want to know how I made 11,000, how I chose which setups to pick, how I choose the stock picks, I'll give you a little tour of what I'm looking at right now. And if I pull this across here, and I'll go TikTok, flip the camera, so you can see this now, and this here is my TikTok profile. So on my TikTok profile, if you go and click this link here, and if it does that, you click open anyway, and then it brings you to my link tree. Now the link tree here is the first one is the course that you guys asked for. This is it, and it takes you. You can sign up straight away for the 30-day. You can sign up for longer. If you scroll down, you've got the option to sign up longer if you want to. But you can sign up for the 30-day. It should take you about a month to get through it. I'll just go through the syllabus. It's 12 chapters syllabus, 12 lecture syllabus. So the first one, you can actually watch the first lesson for free on YouTube. It's available up there on my YouTube channel. So you can go and watch that first lesson for free. Then the next one is about risk management. It's probably the single most important factor to any profitable day trader is how to manage risk. Stock selection. How do I select stocks? Well, let me just tell you how I select stocks. So I've got you can see these here. This is my gap scanner. Set this up every morning pre-market. It tells me which stocks are moving, what the volume is, what the percentage move is, what the price is. I can click on that and it tells me a little bit more about the the stock itself. I can go into the key data, float size, short percentage, all that kind of stuff. This is Benzinga, and I've got the four scanners set up, and I've got my signals set up. At the moment, I'm just looking for halts and resumes. I look for price spikes, high of day, that kind of thing. I'll be changing. In fact, I'll do that now. I'll put the session high and do that, and then I'm looking for. I'll add these back. So I've just changed that to add session highs. I'm now getting session highs. Get the news alerts coming through as well. Benzinga, it's a great tool. It's a great tool. So if you go into the link tree and you click on the third one down, that takes you to Benzinga. Okay, and then you can start your free trial there. Okay, start your free trial, and that's Benzinga Pro. Okay, so if you wanted to find the stocks, 14 days for free. It's not expensive. I use that. It costs me $150 or whatever it is monthly. TradingView I use for my journaling to analyze my trades. You sign up for that. I would recommend it. There's a free option. It's not going to cost you anything. You can get the more premium ones, but for beginners, the free option is usually good enough. You get 30 trades free. And then TradingView is for charting. So I'll just pull up my TradingView. This is TradingView. This is the application. You can do it on the web or you can do it on the app. So this is TradingView, and it allows you to do charting. It allows you to do historical facts and figures and stuff. So like I say, do that. People are wanting to know what the platform I'm doing. This is the platform, okay? So the Dash Trader Pro. You click through that, and you can actually get a simulator version. If you go to the subscribe, you can get a real-time simulator. That's about $150 a month, $150 a month, if you want to do that. Now back to the course. Now the course stock selection, that's what I use Benzinga Pro for that. Then setting up your charts and understanding charts, technical analysis, that kind of stuff. That's important, and you can do that with TradingView for free. Then intraday chart patterns. This is where it starts to get interesting from your point of view, because you need to recognize the chart patterns. I use the chart patterns to actually identify my entry signals, my entry points, where I'm actually getting in, where I'm actually going to exit, all these chart patterns and stuff. Then the strategies, my intraday strategies. What I'm using on a day, the gap and go strategy, the momentum strategy, the reversal strategies, all these strategies to be profitable on any given day. Then I start talking, I've already covered Benzinga, but I actually show you how to set up the scanners on Benzinga. You don't have to use Benzinga. You can use the free options, FinViz, Yahoo Finance, whatever it is. And then probably one of the most important, after risk management, one of the most important pieces of profitable trading, and that's the psychological element. Managing your trades, having a plan before you enter a trade, and then trading your plan once you do enter a trade. That's key. Then I go into a little bit more detail, technical detail around level 2, hotkeys, etc. If you're trading on a platform that doesn't allow you to do hotkeys or hot buttons, then it's not essential, but it gives you an advantage. It gives you the ability to execute quicker and execute at a more rapid pace. Level 2, being able to read level 2, again, it's not essential, but it just gives you that little bit of a distinct advantage, particularly for confirming areas of support and resistance, etc. And then if you're going to do this for a living, you want to be able to trade it as a business. So in this, I'll give you a trading plan, a 3-month trading plan to follow, and how to scale up and how to increase your profitability over time. Then I'm going to go into advanced technical indicators and then introductions to options trading. Now, options is a completely different strategy. It's more of swing. I would say that you can do a lot of different strategies with options, more complex trading strategies with options, but this is an introduction, and it's more in line with swing trading techniques. Now there's a number of different areas that you can go for. Now this is going to cost you $150 a month for this course. Okay, you can get discounts if you want to stick around longer for longer periods. If you want to scroll down, I've actually got my profit and loss over the last full quarter, November, December, January, based on my broker statements, my trader view details. So that's all there. As you click through that first link on my profile, there's the link to click. There's the one to go to. Okay, guys. So that's if you want to learn. If you don't want to learn, that's entirely up to you. You don't have to. You can sit around and join me on the lives every day, and hopefully you'll learn more that way. But if you want to get into it and see how I've just earned, how I've just made $11,000 today in a little over an hour, you know, that's how we do it. No, absolutely. Benzinga, 100% worth its weight in gold. I totally agree with you. And anybody that is reluctant to spend the money. So this is the funny thing, is that I'm complete sellout now, because I'm selling my course here, and that wasn't the original idea for me. Getting onto these live streams. The original idea was I'm day trading. This is my primary source of income. I have multiple income streams, but this is my primary source. And what I mean by that is I make more money day trading than I do with any of my other sources of income. Okay, but it's a lonely job. I'm sat here in this room. Occasionally I'll have the dog for company, but more often than not she's snoring away. So occasionally I'm sat in this room, and it does get lonely. I'm on my own, and you know, trading on my own. You don't have that office interaction, the water cooler gossip, you know, the lunch break with your colleagues. You don't have any of that. So you've got to make the best of it. Now, of course, in the evenings I go out and have friends, you know, enjoy myself with friends, or do whatever I'm doing. But during the working day, they're all at work doing their job. So I'm here on my own, not really interacting with anybody. The original idea of the stream was that, you know, I'll get like-minded people who are interested in the markets coming onto the stream. We can engage, we can have conversation, and it's been doing that. However, the side effect of that was everybody that was coming on the stream watching me making money. In February, I did the small account challenge. I took $5,000, and at the end of the month, I actually grew that up to $110,000 at one stage, and gave some off the top, and we finished on $74,000 in profit in the month of February. So $74,000 worth of profit in 1 month. So watching me do that on an ongoing basis is basically what prompted a lot of people to reach out to me directly and say, can you teach me? Do you have a course for sale? Do you coach people? Do you mentor people? How do I get involved in this? So rather than taking everyone individually, I put the time in, I've recorded the lectures, and I've built out a course that it just details the strategies that I use. It details the techniques and the knowledge that I have in a very layman's term, digestible format that most people will understand. I'm going to be, anybody that takes the course, I am available to you if you find areas that you don't understand for a little bit kind of a deeper engagement. Make it simpler, if you will. But it just came about, and I'm one, like you said, most of those links I've just shown you in one form or another are affiliate links. So if you go on there and buy something through that link, I will get a commission. It's not going to cost you extra to go on there and buy a link, but I monetize all my social media. That's another one of my income streams. I've got e-commerce stores. I've got my consultancy business that I do. I've got my website and my blog that I do. I've got the trading. All of that, even all of that combined, will give me a nice income, but it pales next to the trading. I get the majority of my income from the trading. So to then add another digital asset, which is what's in my mind, putting it into a digital format, i.e. the course, and selling that to people who want to learn what I'm doing, it means that's another income stream for me. And the reason I'm being completely transparent about this is that if you've not got multiple streams of income, guys, you're setting yourself up to fail. You've got a job, great. You might love your job, but JOB stands for just over broke. If you lose that job, you're 3 paychecks away from poverty. So make sure that you've got a backup. Make sure that not only do you have a backup in terms of your income, that you're actually planning for your future. If you're in your teens now, if you're watching the stream and you're in your teens now, then make sure you're putting money aside every single month for your future, for your 50s and 60s. Don't wait till you're 60, 65 to retire. Retire at 55. Enjoy your life. Retire at 50 if you want to. Enjoy your life. Okay, build up a nice nest egg of wealth. It doesn't cost a lot. If you start early, it doesn't cost a lot. You can put $300 a month away from 18, 19 years old, which is not going to break the bank for you. And if you do that consistently every month, you'll be able to retire at 55, 60 years old and not have to worry about your financial future. You'll just be set for life. Okay, if you're in your 20s, and you've not done that already, start doing it. If you're in your 30s, it's never too late to start doing it. The difference being you might have to put a little bit more than just $300 a month away. You might have to put $500 a month away or something like that. If you're in your 40s and you've got a job and that's all you've got, then absolutely start looking at a second source of income. Don't stop looking at ways to invest long term and build up a nest egg of value for your retirement, because you should be doing that. And if you've not done that in your 40s and you've still not done that, get off your ass and start doing it. Okay, it can be painful, but you need to start doing it. And the thing is, though, is when you get into your 40s and if you want to retire, I want to retire at 55. Okay, I've got 5-6 years, well, 7 years left, 6.5 years left to before I want to retire. I just want to down tools and go and sip pina coladas and get even fatter than I am. Okay, have some beauty, brown skin beauty in a grass skirt serving me pina coladas. That'd be great. Okay, I'm not saying what gender because I don't want to offend people who will be whichever. But you need to be planning for your future. Now, I use this as an income stream. It's something that you're not taught in school, how to leverage the stock market, how the stock market works, how to invest. You need to be reading up about it. You need to be self-taught, teaching that, because they don't teach you that in school. They don't teach you that in college. They try and keep that knowledge away from average Joe Sixpack. They keep that knowledge away from you. And all the major rich people, they don't stop at $1 million. If the people who are truly wealthy, they're truly rich, they don't stop at $1 million. $1 million is not enough. 10 million is not enough. 100 million is not. They don't stop. Just because they've reached the goal doesn't mean that they stop. So my goal this year is I want to be earning $1 million this year, US dollars equivalent. Okay. Then next year I can move that goal. I'll see where I finished at the end of the year. I can move that goal and say, okay, well, I might want to earn £1 million sterling this year or whatever it is, and just move the goal slightly up. I might say next year I want to do $1.5 million or whatever it is. So enough is not enough, because think about it from the point of view that you're earning a certain wage and you get a pay increase. What happens? Your cost of living increases because you start to live to your means. So you start off at 18, 19 years old. You don't go to college. You're fresh out of high school. You take a low-paying job because it's an unskilled job. You're flipping burgers, whatever you're doing, or you learn a trade. So as an apprentice, you're being paid buttons. You get your apprenticeship, and then you start getting paid a decent wage. But then you work for the man, and he gives you a pay rise. So you get a 10% bump on your pay. Great. Now I can afford to go out once a week and, take the girlfriend or the wife or the husband or whoever. I can go out and every Friday night it's going to be date night and we're going to go to a nice fancy restaurant. So you end up, once a month, I'm going to go shopping and I'm going to buy, put my wardrobe and fill it with name brands and stuff. And you end up starting living to your means. So then you end up with a 6-figure salary. You're earning 150, 200,000 a year. And you look at your paycheck You think you get a great paycheck, but then you look at your bank balance at the end of the month, and after all the bills have gone out, your Netflix has gone out, your heating, your gas, your car payments have gone out, your mortgage has gone out, and everything else has gone out. You're living to your means, so you end up no different. You've got no more spends than you would have had, no more expendable income than you would have had than when you were back earning 25, 30,000 a year. You're earning 5 times as much, but you're spending 5 times as much. So you need to get away from that grind and start looking at multiple streams of income that are going to help you in the future. Multiple streams of income. Not only does it increase your overall income, but you're not reliant upon going into work and being insulted by some jumped up little Hitler who knows who's the brother-in-law of the big boss kind of thing. You know, they doesn't really know what he's talking about. So get yourself multiple streams of income. Whether there's a link for a $7 course on my thing for affiliate marketing. And affiliate marketing, there's virtually zero risk to that. You can set up a website. You don't even have to set up a website yourself. You can actually put a bit of work in and start subscribing to affiliate code. What is it that you're interested in? Is it the stock market? There are financial affiliate programs out there. Banks are offering affiliate programs. There's one there. Wise is one of my bank accounts. They have affiliate. American Express as an affiliate program. All these finance companies have affiliate programs. You recommend somebody to take a credit card, you get a commission. Is your passion travel? You know, set up a travel blog and monetize it. You know, you can use Emirates Airlines as an affiliate program. American Airlines has an affiliate program. All these travel companies, IHG Group, who own the Holiday Inn, have an affiliate program. All of these companies have affiliate programs. Most companies do. So monetize your blog. And once you put the initial effort in, you spend 2, 3, 4, 5 months, 6 months putting some effort in to build that brand. And then just leave it. You move on to the next project. That starts paying, and it continues to pay. And you don't have to do anything. It's called passive income. And that's what you want to be doing. You want multiple streams of passive income. It'd be great. And then you can actually really retire early and not have to worry about it. Anyway, there you go. Just me on my little soapbox whilst we're watching these stocks consolidate sideways. And I'm not in a rush to take another trade now, because sometimes, like I say, you're an hour in, you're 90 minutes into the market. That's usually what the market's going to give me on a given day. Some people like to trade the afternoon because it's slower and they're a bit more easy paced with the trading. The first 90 minutes, that's usually what I'm going to get out of the market. So after 2 red days, we're finishing today. We're finishing with a good green day, 11,396 in profit. I'm happy right now. That's not to say I won't trade anymore, but I won't be trading a sideways market. All the stocks that I'm looking at that we have been watching are just moving sideways. So until I start seeing some new highs, session highs coming through, I'm seeing a few coming through. But until I start seeing some consistent session highs coming through, breaking highs with momentum, that's kind of me done for the day, and I'm happy with it. After 2 red days, it's good to get another green day under the belt. Tomorrow, green again, and then Friday, another green day. If I look at my accuracy, 66% accuracy today, so two winners, 1 loser, and you know that's a good accuracy. I don't mind that either. But the main thing is that we're profitable, and that's more than we could say for the last 2 days. So we're good again. How much was each dollar amount traded approximately? Well, that's kind of a grey question, but I'll try and address that. So if I took a position, so for example, I would take a position with I think KC. How much did I trade with KC when I bought in? KC, I bought 5,000 shares at 553. So let's just pull this calculator up here rather than doing this. So 5,000 times 5.53. So $27,000 worth of equity. So that's the dollar amount that was in that trade. Now, before I started today, I had an equity of just shy of $44,000, but I had leverage, six times leverage. So in reality, I could trade I could trade about $250,000 worth of $250,000 worth of buying power. So how many shares did I trade in total? The volume shows 130,000 shares I've traded today in total. So that's if I think about from a round trip, I've made 65,000 shares have been bought and 65,000 shares have been sold. So that's across 3 different tickers. So if I say in most cases there've been I've made 27 transactions, so 27 tickets. No actual stocks. I don't trade options intraday. I know you can if you look at some of the more complex. If you look at some of the more complex options trading strategies, you can trade intraday, but the spreads are a lot bigger on options first and foremost, and it's for me it's more of a swing trading strategy when I trade options. Okay. And again, what percentage of my portfolio do I place on a single trade? So it depends on the trade. So just for example, that the KC was the last one. It was the losing trade. It was the last trade that they've taken. 5,000 there, so $27,000 worth of equity, worth of buying power was riding on that. But I'm trading in a margin account, so I'm not placing all my equity in there. And it doesn't really matter because it's about how much I'm prepared to risk versus in each trade versus what reward I'm looking to gain out of each trade. Okay, so plus 500 is offering low spread SPY options with a 1-to-20 leverage. Okay, so the SPY is not. It's a derivative market. It's an index. It's a derivative. So I would rather trade the instrument that's making the moves than the derivative that's moving with the instruments making the moves. So if you see where I'm going with that. So the SPY moving is only moving because it moved yesterday, it sold off yesterday, and largely because Apple started selling off first. Someone in the chat actually alerted me that. I'm like, hang on a minute. Apple usually lags. It usually follows the market, but occasionally Apple leads the market. So Apple started selling off, then a few others started selling off, and then the SPY tanked. That's what happened yesterday. Okay, so I would rather be trading Apple than trading the SPY. Just saying. That's me. That's how I trade. And you know, relative volume is important. So the SPY, you're not going to get good relative volume to trade it on an intraday basis, simply because every day is a high volume day. You know, you're not going to get a day that it's trading 2, 3, 4 times its usual volume. The volatility in the SPY isn't there either. So you don't get the volatility in the SPY on any given day that you do with these Chinese stocks right now. So Casey's just broke out that we were watching, that we were trading earlier. Just broke session highs. But you don't get, so right now, Casey, I'm just saying, I just broke out. It's 70% up on the day. That's me trading stocks. The SPY, when was the last time a SPY moved 70% up on the day? It doesn't. It never moves up on the 70% on the day. Even if you're trading 20-to-1 leverage on the SPY, Paul, even if you're trading 20-to-1 leverage, you get a 2% move on the SPY on a given day, maybe 3%. It's what? So 1.6 today. So if you get a 5% move, it's only moving 100%. You only get a move that you can capture, which is like a 20 times. So 5% move on the SPY will be a massive move for the SPY. And if you get a 20-to-1 leverage, you're getting 100% of a move that you can take advantage of if you put all of your equity in there and leverage the full amount. However, KC here is one of let me just look at this. I've got KC, Becky, CWeb, so I've got 1, 2, 3, 4, 5, 6. I've got seven tickers here that have moved over 50% intraday today already. And I'm getting 6-to-1 leverage on that. So using the same logic, I could get a 300% increase by any one of those by capturing that 50% move. Whereas the most you're going to get is that 100% increase by chasing the SPY. So the opportunity with stocks far outweighs the opportunity on an intraday basis than the SPY. Where does the SPY come into its own, however? The SPY comes into its own if you're looking at potential swing trading for a quick bit of profit. But where the SPY really comes into its own is long-term investment. So you take the Spider, or you take an ETF from ARK Invest, or something like that. Alistair, that's okay, Alistair. If I've missed a great opportunity to the KC, it's gone without me. I can't submit to FOMO, and that's the whole point. There's going to be moves that I miss on any given day, and do you know what? That's okay. But there's going to be moves that I catch. So you can't afford to be. If I look at I'm looking at that now, and it's a great move. I've missed it. So what? It was consolidated sideways. If I'm looking at that, it would have been difficult on the 1 minute. It would have been difficult to find an entry point other than kind of 5. What's the previous high here that we're looking at on KC? The high of day was 557. So the entry there was about 557, which is the previous high of day. So if I look at here where it's gone, 557. Why am I not seeing that? Just zoom out here. That'll be able to see better. There we go. 557. So I would have got in here, the break of high of day, and I could have that potentially a 30-cent move. So yeah, I've missed a 30-cent move. So what? I use 1 minute, 5 minute. I also get confirmation on the 60-minute and daily. But for the pattern setups, I'm looking at 1 minute and 5 minute. Well, Paul, what I was just being, I was playing devil's advocate for you there. Look, if you want to trade the futures, if you want to trade indexes like that, and I'm telling you the reason why I don't trade indexes, because it's a derivative. And you can get better moves from the instruments that make up the derivative than you can from the derivative itself, okay? I'll give you an example. Last week, Indonesian energy moved up 500%. And I traded it. Now, if you capture the whole move with a 6 times leverage, that's 3,000%. You're not going to get anyone doing that with a SPY. A couple of weeks before that, I traded a stock that went up 750% on the day. And this is not uncommon. You know, every day we're getting stocks moving, 25, 50, 75% or more every single day. Sometimes it's a difficult, choppy market. We saw one yesterday went up 200% on very low volume, and it was ridiculous action. And I'm glad I didn't trade it because, like I say, it was erratic at best. So the SPY is great for long-term investment. Why? Because even when it pulls back, that's your discount buying opportunity. You add your dollar cost average, you add more to that because it tracks the wider market. And ultimately, even in a recessive market, you just keep adding to your position. You keep adding down and adding down because you know full well, even if it takes a year, 2 years, 5 years, it's going to continue on the way up. It's going to pass all-time highs. That's why the SPY is good, okay? That's the advantage of trading the SPYs is for long-term investment. On an intraday basis, for day trading, no, you'll lose money. If you want the SPY to do your bidding, you won't. It'll fake you out. You'll lose money. Most people who get into the markets lose money. The profitable ones do it with a strategy. And I'm not saying that my strategy is the only strategy that's profitable. That would be arrogant of me, but my strategy is a profitable strategy. Most people that trade futures, that trade Forex, absolutely. try and ride the indexes, momentum on the indexes, they lose money. If you look at eToro, they did a survey of their own people, and you get a lot of that people buying the Nasdaq and the S&P 5 or the Dow or whatever, and they were saying 80% of their people lose money, with a median or an average loss annually of 36%. So, you know, go figure. Most people lose money. So, which I'll add to the caveat to that. I lost money this week. If I take this week as an isolated period of time, I'm still in the hole this week. So we lost 3,000 yesterday, and let me just have a look at. I think it was 31,000. If I don't want to be so. Coming into today, we were 34,000 in the hole on the week. We've just recovered that, so we're still, you know, 23,000 down on the week. So, and I'm an experienced trader. I'm a profitable trader. I would like to think that I'm a profitable trader. My stats are saying that I'm a profitable trader. And I'm $23,000 on. And as we take this week as an isolated period of time, I'm $23,000 on down on the week. So, you know, even the best people lose money in the markets. Most people lose money in the markets. It's about making sure that when you lose, if you lose big, it's still less than your big winners. If you lose small, of course, you make sure that it's smaller than your big winners. So it's about managing your risk and cutting your losses, not holding on to your losers and letting your winners run. Okay, so Luke wants to know, how did I learn and when? So I am kind of self-taught. I've not actually bought any courses. You can learn from me. You can come on the stream and join my stream, and everybody that's coming on the stream that have engaged directly with me are saying that they are learning from me, and they're enjoying the streams. They're learning a lot from the streams, which is great, and I appreciate that. If you want to take a bit of a shortcut, I do have a course available in my link tree that you can buy. The first lesson is there on YouTube. You're there on YouTube. I've got one there, which is the first lesson is free. If you watch that lesson and if you like it, there's a link in the description there on that video. There's a link in the description on this live as well in YouTube. So for the course, but the strategies that I use, rather than somebody wanted to come on and say I'm a scam and what I'm doing doesn't work, and I'm proving that it works because I do it live every single day, and I've just made $11,000, nearly $12,000 this morning live on stream, and I've shown the entries, I've shown the exits, I've shown the profit and loss. I've just made the thick end of a $12,000 wedge live, proving that it works. Okay, so the strategies work. I learned from a lot of free resources on the internet, and I did a lot of my own research. I lost a lot of money. I put my money into the markets and lost a lot of money. I was up and down. Net, in the first 6-7 months, net, I probably lost about $25,000-$30,000 trading. So even though I was up in some accounts, down in other accounts and stuff, so net, I probably lost about $25,000-$30,000 in that first 6 months. I started trading in mid-2020. I wasn't profitable at all, and in 2020. I'd have profitable days. There were days I'd have really good runs, and I'd go, you know, 5-6 days in a row without making a loss. And making a gain every single day, and that's when you think you're Billy Big Bollocks and you know everything about trading, and you don't, because as soon as you start getting arrogant, that's when the market humbles you. And it's important to stay grounded, because I've found a system, I've found a strategy that works for me. That's not guarantee it's going to work for you, because you do have to have the mental fortitude and the discipline to stick to the strategy. If you don't, then you're going to lose. It's as simple as that. You need to have the discipline to stick to the strategy. So I've been profitable now for a little over a year. When I say profitable, consistently profitable. So every month I've been taking a wage from my trading. Every month I've been taking money from my trading, and I've been making money every month. Now, I've made more money in some months than I've made in others. The biggest single day that I've had is $102,000 in one day. The worst day that I've had is negative $45,000 in one day. So I've lost $45,000 in one day. And that's not, when you analyze your trading, when you make a big loss like that in a single day, you know it's time to take a step back, and swinging for the fences and trying to get $100,000 days it's the road to ruin. If you're lucky enough to get on a stock that runs, like I was saying, that Inspirato stock that ran a couple of weeks ago, if you're lucky enough to get in that early and you're able to run it up, get a bit of a profit on the ticket to start off with, whenever it's pulling back, you're still going to be in profit on that ticker, and you can actually get re-entry, add down, add up, whatever it is, and you ride a 750% move. Yes, you might make $100,000 on the day, but that doesn't happen very often. That doesn't happen very often, and very often it's best just to you've hit your daily goal, get out of there. You know, once you've hit your goal. Now my daily goal is $5,000 on a day. Okay, so which is why I had your man here, Rockhard, saying I've missed a move. Why am I not bothered about missing a move? Normally I'll trade for the first 60, 90 minutes, and that's what the market's going to give me, green or red. That's what the market's going to give me. I have a daily goal of $5,000 on average across the year. That'll get me across to my $1 million for the year. So I have my daily goal. I'm more than twice my daily goal already today. So if I see a setup and I'm concentrating on it, then I'll take it. But to see it out of my peripheral vision while I'm doing something else, while I'm chatting to you guys in the chat and talking and interacting with you guys, then I won't take it. You know, absolutely not. Mindset is 100%, Luke. Mindset is the key. You have to have that mindset. Someone asked me about, when I take profits out, how do I feel after a big loss? So I lost $30,000 on Monday. How do I feel about that after a big loss, they said. I'm like, it doesn't matter. It's not real. It's fugazi. And I said this yesterday, and I'm stealing from Matthew McConaughey. It's fugazi, it's fugazi. It doesn't, you put your money into your broker. This is my mindset, is you deposit the money into your broker. You can afford to lose that. If you can't afford to lose that, don't give it to a broker. Okay? That's rule one. Once you deposit it into the broker, you need to detach yourself from it. So if you put $5,000, $10,000, whatever it is, deposit that into your broker. That's that's the price of trading. And that's the way you should look at it. That's now the broker's money. It's not your money. They're going to give you access to that to make it work. Any money that you make on that, any profits, you don't even count them until the end of the month. So at the end of the month, that's when you tot up your profits and you say, okay, I deposited $5,000 at the beginning of the month, and my account is $15,000. So I would say, great. Split the profits 50-50. You grow your account with half, and you take half as your little reward for being profitable that month. You've got a $10,000 profitable month off a starting position of $5,000. You take $5,000 out, you've got $10,000. If you start like I did this month, I started with $29,000 in my account this month. Last month I started with $5,000, grew it up to $79,000, so $74,000 in profit, and I took $50,000. That was my reward for having a good month. I took $50,000 for myself. So it meant I started with $29,000 this month. So my current equity after today will be over $50,000. So I'll be about $54,000, $55,000. So if, let's just say today was the last day of the month, 31st of March, it's the last day of the month, and I finish on 55,000. I know I started with 29, so effectively I've made, what is that, 24,000, 21,000, 22,000, whatever it is. 55, so 26,000. So I'll take 26,000. I'll start with 30,000 again on 1st of April. So I've made 26,000. That'd be my wages. That'd be my reward for having a good month. Only when I withdraw that 26,000 is it real. Up until that point, I know that I can have a bad day and I can lose 30,000. So I don't count it. Like I say, that what's with the broker is the broker's money. I'm just doing a job to trade it, and my job to trade it is to make profits. And until I withdraw those profits, they're not mine. I'm doing it for the broker, and that's the way you kind of disassociate yourself from it. And so that mindset is absolutely key. In terms of mainly use indicators to trade, no, I use indicators for confirmation. I use patterns to trade. I use candlestick patterns to trade. So I look for patterns forming. So I look for pullbacks. I look for flags forming. I look for flat tops, flat bottoms. I look for bull flags, bear flags, pennants, triangles, that kind of stuff. So geometric shapes on the flag, on the candlesticks, is what I look for the trades. Those are the indicators that I use to trade. The only technical indicator that I really use on a daily basis is the volume weighted average price. Now, that being said, if I feel the need to do any kind of reversal patterns, reversal strategies and things like that, I might use more advanced technical indicators like the relative strength index or the MACD or Bollinger Bands or things like that. But again, I'm not using them for entry or exit signals. I'm using them for confirmation. Why am I not using for entry and exit signals? Well, because these technical indicators are lagging indicators. They're telling you something that's already happened. Now, you should be able to see, if you're looking for pattern formations on the candlesticks, you should be able to see those patterns with your own eyes. And you'll see it in real time before the technical indicators catch up with it. So that's why I don't use technical indicators for entry and exit signals. I use them more for confirmation that I'm making the right decision before I enter or before I exit. So, yeah. Any more questions in the Tiki-Talkie now that I've addressed the questions in the tube? Where did I go wrong Monday? I fucked up plan A. If you've not seen my video, my little TikTok on plan A, go into my profile and look for it. It says plan A, okay? So it'll tell you exactly where I went wrong on Monday. So I didn't stick to my strategy. Is the bottom line. I wasn't disciplined enough to stick to my strategy on Monday. That's where I went wrong. So I didn't cut my losses when I should have cut my losses, and I held on to a loser longer than I should have done. So I didn't stick to plan A. So plan A is take profits as you make profits. Plan B is don't fuck up plan A. So I fucked up plan A. I got in the position at the right level. I got in the position for a breaker on Monday, and I got in with big size, and because there was nothing moving pre-market, so at the bell I got in with big size. It was the right move. It moved up, and I was about 6,000 unrealized profit, and I didn't exit. I didn't take profits. It flushed back down and went against me, and I thought, okay, I'm just going to hold. I'm going to hold here because it was the right move, and I then added to my position. Cardinal sin number 2. Cardinal sin number 1 is trade the strategy. Take profits as you make profits. Cardinal sin number 2 is I added to a losing position. And don't ever do that, kids. Don't try that at home. Don't add to losing positions. So that's where I went wrong on Monday. I threw my strategy out of the window and didn't trade it. That's essentially what happened. I fucked up plan A. Trading is hard, ups and downs, risk management, taking your stop loss quickly. The easiest way to, if you're trading during regular hours, the easiest way to be disciplined about taking your stops and executing your stops when you're supposed to take them is put a hard stop in there, put a physical stop, an actual stop in there, and if it goes below that, you're not having to be exhibit the emotional fortitude to cut your loss, the machine will cut it for you. That's the best way to do it. To start off with, it will just help you build those muscles as you're starting trading. After a while, especially if you trade pre-market, because the stops don't work pre and post market, so you have to have that mental stop. So when you start trading pre and post market, you then carry those bad habits, as I do, into the regular market, and I trade with a mental stop in the red. You see me a number of times clicking on the candle, looking at what's the high of that candle, what's the low of that candle, what's the previous candle. So I'm working at what my next profit target might be, or what my stop loss should be, or whatever it is. Do I think that yuan going to overtake dollar in a few years and be a dominant currency? I don't trade currencies, but no, I don't believe that. Okay, well, look, different people, different strategies. If you take profits on a weekly basis, I do it on a monthly basis, you know. And I don't take see. If you're taking positions overnight, you've got to have belief that the company's going to be there in the morning. So Trex Arkans asks, do I ever take a position overnight and hold it overnight? Very rarely. I think last year I did with DWAC, and there was a reason for that, and it was I was trading up until the close, and then after the close I was holding it into the close, and it continued to move up after the close. So I just held. I didn't add to the position. I just held. And my idea was, if it starts to make any kind of loss, I would exit post-market. And it didn't. It continued to rise. So I was in a very good position. I thought, do you know what? It's got almost a cult mentality. You had a lot of Trump supporters and Donald Trump supporters following that and buying that stock. And it is part of his media empire. And as a result, I thought, I'm just going to hold this overnight, and I did, and it was a really good decision. So sometimes you look at a stock, and it can, for a swing trade, overnight swing trade, it is worth holding. In the main, the majority of stocks I'm trading are low cap stocks. They're kind of underneath $20, $25 a share, and the majority of these stocks are garbage companies. And I say that loosely, but I'm not lying. The majority of these stocks will have one good day, 2 good days, maybe a good week, and then you'll never see them again. A perfect example of this, and I'll pull it up on the screen for the guys in YouTube and Twitch, is CEI. It's an energy stock. Okay. If I look at CEI on the weekly, you can see I traded this back in October last year. It went up to $5, nearly $5. Over the course of the best part of a month, it was continually having a strong, and then it dropped. I got out. I was only trading it intraday, so I wasn't holding it, but you had a lot of people on the various Reddit forums and the like, social media forums and platforms and things, saying, no, it's just a correction, it'll come back, and they're holding bags at $4, and they start averaging down for $3. It's never seen the north side of $2 since. And that's what will happen. The majority of these stocks are exactly like that. They, like I said, the garbage stocks, they'll have a good day and then they won't have that kind of day again. So I don't hold overnight, because a lot of these stocks, they'll sell off, they'll meet the peak and then they'll sell off into the in the afternoon, and then they'll just continue selling off overnight and pre-market the following day. Or they might even gap down overnight. And I don't want to take that risk on. If I've made profits, I want to lock them in. So Dean wants to know, do I do my own taxes, or do I have an accountant? I have an accountant. I always do. Can you see proof of my live trade? That's what I've been doing all day. So do your own taxes, or do I have an accountant? Yes, I have an accountant, and I'm not a financial advisor and I'm not a financial analyst. So if you're going to be doing this as an income, treat it as a business and run it through any profits, any takings, run it through your accountant. Do not get stuck with a massive tax bill wherever you are. Make sure your accountant advises you of your liabilities, and minimizes your tax liabilities as best as possible. Okay, Aaron is obviously new to the stream. Says, can I see proof of your live trades? Seen a lot of people trading on demo accounts. Okay, well, I've shown my live trades. So if you go back into my profile, swipe left on my profile and click one of the pinned videos on my profile in TikTok. Not only will I show you the trading view, which is my trading journal, the trading view of one of my past months. I'll show you the broker reports are on that same month, and I actually show you my bank statement where I've actually taken money from my broker. You can see on the broker report where I've withdrawn money and where it's been deposited in my bank. So the proof's there, Aaron. Just have a look. Okay, just nip back into the into my profile. One of the pinned videos there is all the proof that you can do. On the course, I've got 3 months of those. On the course, I've actually got 3 months of that. I've got my trader view, which shows the trade P&L, and I've actually got the broker reports, which shows the net P&L. And I've got that for 3 months. I've got that for November, December, and January on the bottom of the sales page on my course. So, you know, I don't know what more information. I'm actually in the stream showing you the trades as they're happening. As I complete a trade, I'm taking this camera and showing the trade and talking through what I've just done on the trade. So if I could stream, the fact that I'm actually streaming the trade live on Twitch and on YouTube as well, Aaron. So if you want to actually watch me doing it live on YouTube and Twitch, you can, or Twitch, you can do that either way. So, you know, it's up to you. It's up to you. But, you know, I'm kind of done with the proof that you are legit for what you do. I mean, look, I've done it. So you either believe what you're seeing or you don't believe your eyes. So, you know, open your eyes kind of thing. But how do I identify companies that I'm going to track? So Benzinga, every single day, Benzinga. Benzinga Pro, again, it's in my link tree. For those of you on YouTube and Twitch, I'll just pull this up again. It's Benzinga is the third link down on my link tree. If you swipe left in TikTok, you'll see my link tree. Click the link and you'll see the link tree, and Benzinga scanners and trade alerts. You can try it free for 14 days. That's what I set up. That's what I use every single day. It's worth its weight in gold for me. I can't praise them enough. And actually, they've got a YouTube channel. They stream live every day, but they tend to concentrate on high-cap stocks, so it's not really that appealing to me. But they've got some really good analysts. This is a good YouTube channel if you're still learning. What I would say is, if you want to take my course, great, but don't just limit your learning and limit your trading education to what I can teach you. Open yourself up to multiple sources, and that way you can develop your own strategy that works for you guys. Okay, get rid of that. So Luke wants to ask, what's a realistic amount to start with? And I'll say this very vaguely, like I do every single day, is no more than you're prepared to lose. There's a reason I say that, and that's because I want to have a look at Becky. No, it's not. I thought it was coming up to breaking highs, but it's not. It's sold off now. That channel that we drew, it's funny how it's respected that as above support and resistance. Becky. So we drew that channel here, and it's just got bigger and bigger, and it's just used that same channel. So we drew it up here, and that's mad how it's just used that channel. But that's the power of technical analysis. So Becky's sold off. I think I'm done for the day. I'm done trading for the day, that's for sure. So I'm happy with 11,000. After 2 red days, it's just nice to get a good green day under my belt. Most brokers will offer you 4 times leverage, and it's not that I chose 6 times leverage. It just happened to be the margin position that when I signed up with capital markets, that was their margin position. Now, additional to that, originally when I signed up with them, I was being charged per share commission. Now I get charged per ticket, per transaction, per execution. So when I was being charged per share, it with a small account, it made it cost prohibitive. So if you're being charged per share, you've got to factor that into your risk and reward analysis of each trade. What is the cost going to cost you on any given trade? So it meant with a small kind of $2,500-$5,000 account, if I make a trade and I make $50 profit and I'm getting charged between ECN fees and commissions and FINRA fees and all this kind of stuff, and I'm getting charged, by the time I finish with that trade, I make $50 profit, but I only make $40, but $40 of that gets taken off me. I'm on $10 net. So that for me was a bit of an issue, and I had that issue with Interactive as well, because they only gave me 4 times leverage. So as a small account, 4 times leverage was difficult to grow that account, I found. So six times leverage allowed me to take a bigger position for a smaller equity. I don't know if that makes sense. Because I had a larger buying power, an additional 50%, if you will, in terms of buying power. So putting $5,000 into Capital Markets Elite, I was able to have a buying power of 30,000. Putting 5,000 into Interactive, I've only got a 20,000 buying power. So there's a big difference. There's a big difference. Now, conversely, when you're in that kind of a situation, you're taking bigger leverage. If you're taking a bigger leverage position, you've got to be even more disciplined with your risk, because the likelihood is that you'll get margin called a lot easier. Whilst you can make 6 times the profit on a move, you can also lose 6 times the money on the same move. So just be careful. It's practice in a simulator. I always say practice in a simulator first, and then whatever you're practicing on your simulator, whatever if you can alter the values in a simulator, great. I know some are capped at like 100,000 or something, which is a bit of a pain. So what I would do if I was you, what to do with if you've got $100,000 in a simulator and you can't alter the limit, just go and buy, because it's a paper trading account, go and buy, say, $90,000 of Apple or something like that, and just hold it. So you've then got $10,000 to trade with. Or buy $80,000 worth of Apple and just hold it. And so you've got, and that way that's taken out of your buying power, okay? So then if effectively that, from a simulator point of view, from a paper trading point of view, it then basically means that you are trading with that remaining 20,000 that you've got. And you can then say, okay, well, I'm just going to hold the Apple or whatever it is, that's taken care of. I'll hold that long term whilst I'm learning how to trade. I've now got an account, a simulator account with $20,000. So let's say you put $5,000 into Interactive Brokers or 212 or whatever your broker of choice is. They give you 4 times leverage. You've got a $20,000 buying power there. So before you actually put the money on the line, you can reduce your buying power in that simulator by buying $80,000 worth of a stable stock, but it's not going to lose a lot of its value anyway. Not that it matters anyway, because it's paper money, but it allows you to get a realistic view, or relatively realistic view. Maybe the emotions aren't there at the time, but of how to trade with a smaller account. So then you get used to trading with certain share sizes. You get used to trading with blocks of 500 shares. Blocks of 250 shares, blocks of 1,000 shares for smaller cap stocks maybe. So you get used to trading with those. So when it comes to actually putting money in your account, you're used to trading with those block sizes. So that you're trading with 250 shares or 500 shares, as opposed to if you just take the full amount and you start trading with 5,000 shares, 10,000 shares straight away, and you can't afford that. Okay? Sorry to hear that, Cornflake. It's just brush yourself off, shut down, walk away, brush yourself off. There's another day tomorrow. Today's today. It's a red day. Put it down to a red day. Okay, it happens to us all. I'm proof of it. I had 2 in a row. So, don't worry about it, Cornflake. Tomorrow's a day. Tomorrow, just scale down, scale back, and tomorrow trade a little bit smaller and just get green on the day again. It's important once you've had a red day just to get another green day back under your belt. So broker recommendations. I trade Interactive Brokers. I trade Capital Markets Elite Group. A lot of people don't like the thought of trading with Capital Markets because it's an offshore broker. So they're worried about if they decide to up sticks and disappear. And I get that. You've got to mitigate against risk in all kinds of different ways. So this is why I say Interactive Brokers, very reputable broker that I use. They carry the majority of, and I use Daytrading with Interactive as well. But I pay separately through Daytrading for my access to the markets and access to the data, which gives me access to all the instruments as opposed to just what Interactive are carrying. So I've heard good reports. Do your own research is what I'm saying. Get an account with a few of them. Try trading with the platform on the paper account. They'll usually allow you to open an account for free. And you can try trading the platform for a few days before you deposit any money. If you need to deposit any money, I think the minimum deposit in most brokers is about $500 in some, but most of them it's like $50 just to get active. And get access to the data stream and stuff. And then try the platform. If you don't like the platform, get onto Daytrading, download the platform and subscribe to, try it free for 14 days if you like. Configure it and what have you. T1000, T9000, something like that. Lightspeed or Sterling Trader or something like that. Use one of those as a simulator, wherever you are. Alternatively, you can, the link in my profile, I've not shown that link. I'll talk you through that as well. The link in my profile, if you want to trade with the prop firms, so there's TradeNet is a prop firm that I recommend. I traded with them last year twice for the World Series of day trading, and I'll show this for the TikTok stream, but it's on the other streams right now. I'll flip the camera. So here we've got back in my link tree again. So in my link in TikTok, you click the link, you go to the link tree, and then we come down here to TradeNet, and this is learn to trade stocks and shares. If you click on that one, it opens this one, and what they do is they will give you a funded account, okay, and you can take the majority of the profits. So what that means is there's 3 options with it from a stock trading perspective, okay, rather than risking lots and lots of money. So what here is the top one is you can get $80,000 live account to trade on the stock exchange, but the maximum loss that you can have is $4,000. So the maximum that this account value needs to go to is $76,000, no less. Okay, it's got to stay above $76,000. So what they're actually doing is that you pay $2,700, so you're risking the whole of that $2,700. If you lose $4,000 in the live account, you lose the $2,700. Okay, period. But if you lose the $4,000 in the live account, they are actually losing $1,300. So they're actually risking money for you as well. And this is why they take a 25% cut of the profits. Now, you do have a simulator or a paper trading account, a practice account, to hone your strategies and do that. And you can trade with $80,000. Now, my question to you is $80,000 buying power. You've got $80,000 worth of buying power. You should be, and you can set yourself a goal of, let's say, $200 a day on that. If you do $200 a day, that's $1,000 a week That's $4,000 a month. Okay, that's $48,000 a year. That's a good income for most people. Okay, but follow risk versus reward. If you've not got the 2,700 to trade, but you still want to get in, there's a similar option, but it's $14,000 live account that they will give you for $350. Same sort of thing. Your access to a trading room gives you mentorship or whatever it is. The trading room gives you ideas. You got the practice account, and there's a reason. I'll come to the reason why I'm suggesting this is an alternative to just jumping straight into the market. You get to trade with their money, and this one you keep 70% and they keep 30%. Okay, or you can just put $200 in and have a little try at the challenge. Now this is actually a good challenge for $200. What it is your maximum loss is $500. So you keep your risks small. Don't risk more than $50 on any trade. Okay, take lot sizes of like 100 shares, 250 shares, 500 shares maximum is what I would say on that. And you're risking $50 per trade. Okay, the goal is to reach, and it's not a time limit or something. The goal is to reach $13,000 account value. So $3,000 profit target. If you do that, they'll give you $2,000 cash. Now with that $2,000 cash, you can either go and put that into your own brokerage account, or they'll give you the $80,000 live account, which we were talking about here. And you can use that same rules apply with the $80,000 live account. So if you take the prize for $200 and you get to 13,000 on this paper trading account, you'll get a live $80,000 account to trade. Okay. The thing is here, it's not as easy as you think it is. Okay. So learn how to trade first. But this is what you get with this is the ability to practice your strategy. If you are starting to be profitable in a simulator, this is a way of trying to see when there's real money on the line, can I still do it? Can I keep control of my emotions? So it's a good way to actually try it without putting a lot of your money at risk. Okay, and as I say, on the link tree, this is the one down here with the white learn to trade stocks. There is exactly the same one, learn to trade crypto, underneath it. So a similar scenario, but I know everybody's saying that I want to day trade crypto. I wouldn't recommend day trading crypto, but you want to try it, they'll give you a crypto account to trade with, and you've got the option for $200, you'll get a $10,000 crypto account to trade, or for a little over $2,000, you'll get a $60,000 crypto account to trade. So that's another good way of actually getting into the market without risking too much of your own money. So just giving you options. Okay. So simulator accounts, like I say, I use Daytrading Pro, so most brokers will give you whatever simulator, whatever platform they have. When you sign up with them, they will give you a sim account. So trade in the simulator account first. Okay. What are my opinions on pump and dump schemes? Would I ever be part of one? No, I would not be part of one, because knowing my luck, see, I'm the kind of guy that can fall into a barrel of nipples and still come out sucking my thumbs. Okay, that's my kind of luck. So if I'm get involved in a pump and dump, everybody's dumping after I've tried to join the pump. I'm the one that gets left holding the bag, so I won't be part of one. And it's also why I cap my lower limit on the value of stocks that I trade. I don't trade anything less than $3. There's a number of reasons why, but one of the reasons is that the lower the price of the stock, the more susceptible to pump and dumps it is. I stay away from the OTCs, the pink sheets, as it were, for that reason. And I'm very careful about some of the, pancake swap, obscure cryptos that are getting a bit of focus on social media for that very reason. if I'm going to be trading on a crypto, and this is where you see a lot more pump and dumps is on crypto than you do in the stock market. You see stocks on pump and dumps in the stock market. If you do get involved in a pump and dump and you do get caught holding a bag, and let's say that the SEC notice that there is something suspicious, you don't just get a volatility halt, you'll get a halt pending investigation, and that can go on for days, weeks, or even months, and your money's tied up in that. And if the SEC decide, okay, the activity on this particular stock that your money's tied up in, there was illegal activity, they will delist it. It might be on the NASDAQ, they'll delist it from the NASDAQ. It might be on the NYSE, they'll delist it from the NYSE. And if that happens, you could lose your entire holding. So I don't get involved in pump and dump schemes. For me, it's not worth the risk. Criminal activity, there's always somebody making a profit out of criminal activity. But there's always somebody going to lose. And usually it's me. If I try and take profit out of something like that, it's me. Do I set my scanners to moving averages, or do I use another method? I don't set my scanners to moving averages. So again, moving average strategies, like the moving average crossover strategy that a lot of Forex people will use as entry and exit points. I would use that more for confirmation. If I'm looking at the moving average crossover strategy, I'm only using it for confirmation of what I'm already seeing on the candlestick charts. My scanners, I'm looking for high relative volume. I'm looking for the actual price in a certain bracket. I'm looking for gappers. I'm looking for volume, and I'm looking for trends. So high of day, something breaking a high of day. So range breakouts. I'm setting my scanners for range breakouts. I'm setting my scanners for high momentum stocks, high volume traded, high traded stocks. That's what I'm looking for on my scanners. E-trade. If you want to make good money, pay good money for the setup. No, I totally agree with that, Rasper. I would. That's. See, I'm on my course. I actually go through trading as a business and the expenses on a monthly basis that I incur on a monthly basis. So people are saying, "Can I get in for $1,000?" I'm saying, if all you've got is $1,000, you're not equipped to trade in the market. You need more than that. So the first 3 months of your trading, you're going to lose money. That's the first thing. Okay. The second thing is that you can get FinViz, you can get Yahoo Finance, you can get, even TradingView themselves have their own scanners. There are a lot of free scanners out there, but they're quite frankly, they're very basic. They're not very user friendly. You can get the same information from them if you're prepared to work at it. Benzinga has everything I need at my fingertips. So I pay, 100, I think it's $170 or whatever it is for that on a monthly basis. I pay my subscription to Dash Trader on a monthly basis, which is $200 a month for my access to my IBK, my Interactive Broker account. Now, the thing is with that, I don't use that every month, and it's still coming out of my bank account. Go figure. I get charged platform and data fees for the same platform that I've just paid for access through Interactive Brokers. I get charged platform and data fees from Capital Markets on a monthly basis. Now, to be fair to them, they do usually refund me that a couple of days into the following month because my commissions reach a certain threshold because I'm an active trader. But you need to factor in that could be the case. Your platform and data fees. If you go to Interactive Brokers, for example, and you want to trade on their own platform, you have to pay data fees for that as well. So there's certain platform and data fees. Most brokers will pay for that. TradingView for charting, you can do that for free. There is a premium version that you can get with a lot more functionality and a lot more indicators, but you don't want more than 2 or 3 indicators on your chart anyway. It just gets messy and confusing. What else? TraderView. So my journaling, TraderView, and I'll pull this up here. So I'll set it for this year. So TraderView. So this is my journaling. So I can look at TraderView here. and it gives me, when I look at the report section, I look at the overview or whatever, I can see I had 2 red days in January, 3 red days in February. I've already had 3 red days in March. So I want to go green to the end of March now, ideally. Okay, I don't want to be increasing the number here. So if I look at this from a detailed point of view, I can work out what my risk versus reward is. And at the moment, it's I've got a negative risk versus reward, so I need to work on that. But my accuracy is 72%, which is extremely high. I've got an extremely high accuracy. I need to, I don't mind sacrificing some of that accuracy, but I need to work on my risk versus reward. It's slightly negative, and that's not a good sign. Okay, now this is largely down to the big loss that I had on Monday. So if I take that out of the equation, if I just look at before that, and I've got a positive risk versus reward based on the averages on the trades, but my accuracy is 75% even then. So ideally, we want to be looking at that, and I can look at the graphs here. I can look at the win days versus loss days. What's happening on a win day? What am I doing on a loss day? What's the best day of the week for me? Okay, so Tuesdays and Thursdays are my best day of the week. Mondays are my worst day. So why is it come as no surprise that my 2 biggest losses this year have happened on a Monday? You know, the stats here tell me that. Now I subscribe to this one. I've got the intermediate package on this one, so I subscribe to this. It cost me like $30 a month for this, but there's a free package which allows you to get access to all of this data, all these statistics. You can actually do that for free. So, you know, if you can, why not? That's TradingView, TraderView. Not to be confused with TradingView, which is the charting platform. So no, I don't want that. Just looking for my tiki-toki stream. Okay, so E-Trade, if that's your own, Scanner's done that. Yeah, pay for the platform. Pay for, you know, cost me in total. It cost me about $700-800 a month to trade, if I'm being completely honest. Thoughts of stocks over Forex? 100% stocks every time. Roberts. I trade stocks. I don't trade Forex. Forex, you're looking at extreme leverage. In many cases, it's 200%, 250% in some cases, which makes it extremely risky. Secondly, you don't get the same volume in Forex as you would with stocks. So, you know, I'm a volume chaser. I follow the crowds. I'm a pattern day trader, and I trade the volume. So I look for the pattern setups, and I look for the pattern setting up on a stock that is being traded relatively higher volume than it normally would trade on. So in that case, I know that other retail traders are looking at it and watching it and trading it in the same way that I'm trading it. So I'm not trading some obscure strategy that I think is the magic portion. I'm trading a well-known, reputable strategy that's proven to be profitable by hundreds, if not thousands, of other retail traders are following the same breakout. So as it breaks out, I see the volume coming in, and it gives me that confirmation, and that's why I trade stocks over Forex. What you get with Forex, and the reason why over 95% of Forex traders don't make any money, they actually lose money in the long term, is because they don't have a set strategy. They go from one indicator to the next indicator, and they have multiple indicators. They get confused on what they're trying to achieve. If they do make a win, it's usually out of luck. You get, actually, Rainer Teo has a channel on YouTube, which I think is really good, and he trades Forex. He trades stocks as well, but he trades Forex primarily. He's a Forex trader, and he's quite good, but he's very disciplined, and he does have a strategy. So and go have a look at his channel. He's good, a good guy. and he's one of the few that I would say actually talks sense around Forex. Most people don't. Most people are bullshitting around Forex. Am I red or green on the day? Well, 11,400 green on the day. Super chip. So we've had a good day today. And we needed one. We had 2 red days. We need to get a green day under the belt, which is why I'm not rushing into trade at any others. I've got more than what the daily goal is. So I'm calling it quits. Quitting while I'm ahead. And I'm happy enough with that. So I'll take 2 minutes. I'll close down the streams, and I'll take this this teddy bear for a walk. You must have top class broadband. I've got fiber to the door. So I've got cable broadband. So I've got fiber to the door. I'm actually trading on Wi-Fi. So I've got a 5G router. So this is what connected via Wi-Fi, via my Wi-Fi, but I've got fiber to the door. So you don't want to be trading on a dial-up, that's for sure, or an ISDN line. You want a good connection. You can't. One thing you can't do with you if you're day trading is have poor latency on your connectivity. So my advice from a no problem, Luke, no problem, anytime. My advice for anybody that's talking about what's your setup, hardware, connectivity, all that kind of stuff, is get your setup. These 8 screens to the side of me, they're not screens, they're just charts, 8 charts. This was my watch list when this day, it's 1 screen, but this was my watch list. Those all on the 1 minute time frame. So those were the stocks that I started off pre-market watching. I've traded 2 of them. No, I've traded 3 of them. Traded this one, and this one. These 2 for profit, this one for a loss. So, you know, I don't mind that. But when I'm saying about the setup, I say set yourself up like a gamer would. So I've got a gaming laptop, I've got multiple screens so I can multitask at any one time. You don't need multiple screens, 2 screens is enough. Anybody says you don't need 2 screens, I say you want 1 for your screeners and your scanners, 1 for your trading. You don't have to have this set up in terms of your watch list. You can build a watch list in either Benzinga or whatever your scanning platform is, or you can build it on your trading platform. You can build your watch list that way. But I also have my 3rd screen. I've got my streaming platform there. I've got my email. I've got, you know, various websites open. So while I'm doing all this, I'm also on this one doing something else unrelated. So I would say you need a minimum of 2 screens. If you've got a laptop plus a monitor, that's sufficient. You can have more. More isn't necessarily better. But I would say just at least two screens that you can flip between. And you want a gaming setup. So in terms of your connectivity, it needs to be low latency. You need your CPU on your need at least 8 meg. I would recommend 12 meg RAM, at least 8. You need a CPU that's set up for gaming. I've got a gaming laptop, so it's already pre-configured for low latency and fast processing, and that's really what you need. What programs? It's one program. The same as this all here. These 2 screens are the one program, and it's DAS Trader Pro. No, it's not normal for a broker to take 5 seconds to confirm a trade. That's the whole point of why direct access, low latency direct access software is better than one of these free commission brokers. If you're going on with a free commission broker, they're going to fill you at horrible fills, and it's going to be market orders, and they're going to charge you commissions, but they're going to get payment for your order flow. So they're going to give it to whichever market maker gives them the best kickback. Not necessarily what's best for you, but what's best for them. So that's why it takes them 5 seconds to get you your fill, as opposed to if you've got a direct market access. What's my pros and cons when farming with crypto? Well, I don't have any because I don't farm with crypto. Sorry, I'm just a poor day trader. I can't comment on farming with crypto. What I know about crypto is I know about swinging it and I know about investing in it. That's about it. I don't farm it. But you're welcome to educate me. If you want to get in touch with me directly, we can have a conversation and I'll look into it. No problem. I'm not going to talk bollocks on screen trying to look clever when I don't know what I'm talking about. That's all. Super. I'm sorry about that. If you were expecting me to know more, I'm relatively new to the finance industry. When I say relatively new, I've been doing it for a couple of years. So I've found my niche. I've found what's profitable. For me, I'm happy with that. So I'm not going to branch out and until I'm not comfortable with this anymore. If I can do this standing on my head without really thinking about it, I might look at other areas. Crypto farming, for example. If somebody's going to turn around and say, look, you're missing the trick with crypto farming, you can be making $10,000, $15,000, $20,000 a day doing nothing by crypto farming, and all it's going to cost you is the price of the electricity, then I'll look into it. But same with NFTs. Someone explain NFTs to me. Just NFTs to me are a scam. It's a way to launder money, and I don't get it. It's like buying the Van Gogh at auction. Who's going to pay 40 million bucks for a bloody painting of a guy with an ear on his nose? I mean, come on. It's like, Pablo Picasso. Get real. I don't get it. I don't understand it. I like art. Don't get me wrong. There are certain artists that I like. I went to college and I had posters of Salvador Dali on my wall and things like that, and the color schemes and all that kind of stuff. Would I pay 40 odd million dollars for a Salvador Dali painting? Not on my Nelly. So I don't understand NFTs. For me, I'm out. I'm not risking any money with NFTs at the moment. So I've been asked twice, how much have I made today? So DJM and Axel Brand have asked me what have I made today, and I'm currently a little over 11,000, a little over 11,000 to the good. So where are we? Okay, so I just want to bring that chat back up. What was the question? So, how much CP capacity is recommended? Okay. Oh, let me just go into this PC, what I've got. So I've got 8 gig RAM. I've got a 3 gig graphics card and a 5000 hertz CPU, so 64-bit. So that's what I'm trading on, and I would say 8 gig RAM is a minimum. I actually thought this was 12. I would recommend 12 gig on the RAM, but at least 5000 hertz processor and maybe a 3 gig or better graphics card. That's as a minimum. So basically, if you get a gaming setup, then I would say it should do you good. That should be sufficient enough for you if you get a gaming setup. Right. Right, I think I've answered most of the questions. I think we're, what are we? 4 o'clock my time. That's that. Midday. So that's my cue. And thanks for joining me. We're back at it tomorrow. Hopefully get another green day under our belts tomorrow. And like I say, check out the link tree. My course is in the link tree if you want to avail of that. The first lesson you can get free on YouTube, and if that whets your appetite for the rest, then it's $150 the course, and you'll get a one-to-one with me as part of that, where we can actually go over it directly on a one-to-one basis. check out the rest of the things if you want to trade either crypto or the trade nets are prop firms are a good way of getting into it. Other than that, I'm going to shut down for the day. I'm over 11,000 good, over 11,000 up on the day, so that's me good. Covers yesterday and a little bit into Monday's red zone. So hopefully we'll finish green on the week by the end of this week. We've got 2 more trading days, so I'm going to take this little teddy bear for a walk, and I'll show you how cute she looks right now. Sat on the sleeping on the sofa. This is her sofa, by the way. This is her bed. It's in my office. So if that isn't just the epitome of adorability, my little teddy bear. I mean, look at that. How can you not fall in love with that? That is just beautiful. Okay, so yeah, I'm going to close this stream down, and I'm going to close me down on YouTube and Twitch as well. So. All the best. I'll be back at it tomorrow, and you're welcome to join me tomorrow, and we'll make more profits then.